Sajal sir, I have shared the link. In the meantime, may I request you what we discussed last time? So if we can briefly discuss, because I got many requests and you must have also got the request because the last session was not recorded. So 2-3 minutes of, if you would like to.
Yeah, sure. I mean, so definitely, exactly as you explained, Prince. The last session went well, and we didn't record it. That was a regret, to be honest with you. So, I mean, we are recording this session, so I'll take this opportunity to just put a disclaimer upfront that whatever we are discussing is just to illustrate the examples or the thesis that we have. It could be a negative view, contrarian view, or optimistic view. None of this is any sort of recommendation to sort of trade or transact in the underlying security. It's solely your responsibility to do the hard work, due diligence, rather than blindly do a copy paste exercise. So that would be my disclaimer upfront. I think, in the interest of the time, while we are waiting for others to join, maybe as we are recording this session, I think there is no harm in maybe taking some questions. I see Safir Bhai is joined as well. Hello, Safir Bhai. I think we should make him. He's not allowed to be a listener, so he should be he should be a speaker.
Yes, sir. I have sent him the request, sir.
Hi, good afternoon. Thank you so much. I was very interested in hearing you, so I couldn't resist. And it's wonderful that I've joined to hear you.
Alright, welcome, Safir Bhai. Pleasure is all ours, and others as well. I mean, if you have any sort of, especially the contrarian view or the negative view, do chime in and help us all. Do some open the bonnet and just check the wirings again. So please feel free to challenge any views. This is an open forum. Bring all the perspectives, especially the contrarian or the negative ones.
Hi, Tushar.
Yeah, hi everyone. Am I audible?
Yeah,
Tushar
yeah.
bhai, loud and clear. You're sounding less optimistic for some reason.
No, it's afternoon, bang in the afternoon. I was having a nice peaceful sleep. I just getting my batteries charged up, frankly.
Okay,
So, Sajal bhai, passion is not a problem here. I'll pick up. Give me 60 seconds.
sure. Yeah. So, Prince, I think we can crack on then.
Yes, sir. Sir, I would request if we can brief about last session because I got many requests on that, and then we will move on to the questions we have with us, and then we'll be taking speakers. Yeah.
Yeah, I mean, I think the key takeaway from the last session was what Aditya mentioned about the annual reports, right? So he said that the first 20-25 pages of the annual reports are uh, kind of all marketing jargon, and they are kind of outsourced. The way to read the annual report is if you read it from the bottom. The problem with annual reports these days is because of the statutory clauses and requirements by law. The reports are getting longer and longer. I mean, in olden days, it used to be 30-40 pages and you are done with the annual report. So, pretty much just looking at the balance sheet, management commentary, cash flows, that type of thing. Now that you get, it's common if you pick any large cap pharma, 300 pages is kind of the norm these days. So that's a challenge, but start from the bottom. That was one of the key takeaways. The other key takeaway was that do not consider these large listed players like Lupin or Aurobindo, um, wherever they are getting the majority of the cash flows. Zydus, majority of the cash flows are Biocon, majority of the cash flows are getting they are getting from US. uh, don't assume that to be a structural, because see, pharmaceutical or healthcare is a structural, but that doesn't mean that every company is structural, and especially these ones. So always treat them as if you're buying a sugar or a paper or a metal stock. You have to buy them at the bottom of their cycle or near the bottom of the cycle, or at least when they are below their 10-year mean. Whether that's the price to book or price to sales, I don't care. I i typically prefer price to book or price to sales for the simple reason that um, they eliminate the cyclicality in the earnings. So if I'm looking at EV EBITDA or price to earnings, the earnings volatility is a factor. So if last 4 quarters the earnings have been blockbuster, the PE will optically look uh, low, and likewise the EV EBITDA would optically look low. And reverse is also true. If the last 4 or 5 quarters, especially as an example in case of many of the API companies, and there have been no earnings or earnings have degrown. So for that reason, the EV EBITDA or the price to earnings will not give you the real sort of like for like comparison. So you are better off going with price to book or price to sales, because that is across the cycles. So for that reason, I always recommend openly using these two ratios rather than EV EBITDA or price to earnings. So that was another discussion we had. Then I think, is there anything that you remember, Prince, that you want me to elaborate upon from that session?
I'll come to that, sir. In the meantime, I would request your attention toward, like you yesterday asked me, the operating cash flow before working capital was in single digit. Now the OCF before working capital will be in 4 digits this fiscal. So it took 20 years to cover this journey. So you wanted to speak on this, sir.
Yeah, sure. I will start on this, and I know um, Tushar bhai will also have an opinion on this. So here is a business where the promoter perception is not great. It's rather on the low end of the spectrum. And if you are on sort of WhatsApp groups, or if you are on Twitter, if you take others' opinions, people will always, or majority of, not all, majority of those opinions would be negative. And if you ask for evidence, people will say, oh, there was some collusion with some sort of player at such and such period, or the management has not done this, or they haven't done XYZ. All sorts of stories or narratives would be presented without any concrete evidence. I repeat, without any concrete evidence. Even some would say that the transcript was changed. So maybe now you guys know which company that I'm about to reveal. So this is by the way Granules India, and a very reputed fund manager about 2 years back tweeted saying that this is granules of crap. So there is a very strong negative perception about this company, but I'll give you a number. This is and see, in Indian market, about 7,000 odd listed stocks. How many are there as a 100 bagger over 20 years? Not many, and I'm talking about all sectors, from IT all the way to financial services. And if you split that number and then um, uh, move down to the pharmaceutical space, the generics pharma, that is within healthcare, that 100 bagger over 20 years is a even smaller number. So off the top of my head, even today, I think Lupin is a 100 bagger. And then there are a few other companies in Sun Pharma is definitely one, and few more, but not a lot, not many. And Granules has been a 100 bagger over the last 20 years. Now, when I say 100 baggers, there is some interesting data. The operating cash flow has been way more than 100x in the last 20 years. And that's a number, right? As I keep saying, that the quality of the management over a period of time will be seen in the numbers. Numbers don't lie over a period. Numbers may be lying over 1 year, 2 year, but numbers don't lie over a period of 25 years or 20 years. So operating cash flow is 100x. And then I'll give you another number. Sales has been 100x. How many pharmaceutical companies have grown sales 100 bagger in sales alone over the 20-year period? So Granules India ka sales in 2000, year 2000 was close to 30 crores. That's the number. The profit after tax in year 2000 was just 2 crores. That's again a number. And I won't be surprised from that 2 crore if this business goes to 2000 crore. I repeat, 2000 crores of PAT. It may not happen in the next 5 years, but I can definitely see at some point in this decade that Granules will hit 2000 crore profit after tax. So what I'm trying to highlight is that there will always be sort of the chatter and the narrative about a business, but you have to do your own due diligence in terms of have they walked the talk in the past, what sort of capital allocation they have done, how they have scaled up the business. Those are the important criteria to consider rather than heard on the street, quote unquote, or the shallow gossip, which is majority of the traffic flowing into these WhatsApp universities and this Twitter school of economics. So I mean, that's my view, and I'm not sure what Tushar bhai and Safir bhai, if you've got any view on this business, please chime in.
Sir, I couldn't see Tushar. I think he got dropped. So let me connect with him again. And in the meantime, Safir, sir, if have any view, he can share, or otherwise we'll move on to next question, as you say.
I know I don't have a view except that I generally heard that the promoter wanted to make an exit. I don't know whether it is true or not.
Yeah, that used to be the rumor about 2 years, 18 months back, Safir bhai, but they have categorically denied it on sort of recorded. So there's, I think, Madhu Kela also asked this question on one of the earnings call, maybe 4 quarters back or thereabout, and they said, this is on record that we are not considering that option. They have denied this several times on media as well. And I think, given what they are doing today, which they haven't done in the past, the kind of actions that they are taking on the novel technologies side, the way they are embracing the new technologies. I mean, I think that's my perception. And again, I may be biased here. I think that business is not rightly valued today. So if they have to exit, my suggestion to the management would be that they consider that option 5 years out and not today.
Tushar bhai, you also
Yeah,
covered this company. I saw it in IIC season 7. So would like to love to know your view on that also.
right. Yeah, so thanks for the opportunity, Prince. Just one disclaimer. I will probably have very reserved views on specific stocks. I generally don't comment on specific stocks in public forum, but wherever possible, I will definitely add value. Yes, Granules is one stock that we are personally invested in. So again, that's a second disclaimer. These views are only for educational purpose. See, one thing to really note in this company, right? If you look at their top molecule, it's a commodity product, which is paracetamol. It's a 1,000 crore revenue business for them. Now, a lot of people would perceive that as a risk. 1,000 crore product, which is a commodity product, and people will say that the margin is not that high on the product, or there are a lot of players competing, and what is the moat in that product, for example. But I would flip that question on its head, and I would, or that observation on its head. And I would ask, how many products are there in pharma? Any company in India that you can name of, how many companies have one single product which is a 1,000 crore revenue? Be it commodity, be it specialty, be it, complex generic, be it whatever. You can actually name such instances, you can count them on your fingertips, maybe. the beauty is, if you are actually a leader, a cost leader in a commodity product, you are basically having a unpenetrable moat. Nobody can challenge you. Let's say, let's take as an example, this just for representation. Let's say Granules has a 20% net margin in, if it were only selling paracetamol, right? 1,000 crore revenue means that maybe 200 crore EBITDA is coming only from paracetamol. You know, if another competitor decides to come in and really aggressively challenge, they can actually take their margins to zero for 2 years. The company will suffer a lot, maybe. But do you think another competitor would be able to come in and against that 400 crores of potential drop by Granules, any other player can build a business of this size again in this space? It's very, very difficult for someone to build another paracetamol from scratch today, right? And for Granules, the product continues to grow at a very healthy rate even today. It's a growing product. Between the top three products, they have more than 2,500 crores of uh, you know so-called commodity products, which are actually giving them more than 20% margins, and the numbers continue to grow. So it's an example of a very good, very successful execution by a company in what is so-called perceived commodity product. What I would see is that, irrespective of whether the product is commodity or specialty, what the company is doing, what are they being able to achieve in the space that they're competing in, and whether they have a right to win. B, whether they have an ability to grow and grow consistently, and C, whether their commentary or their outlook has been consistent, and they have actually achieved, or they have delivered in line with what they had guided. So I would say, just do one thing to anyone who's studying this company. Go back to the last quarter of FY18. Uh, that's 2018 June, March quarter, and start picking, pick up the quarterly con call of March 2018, and just read quarter by quarter what the management has commented about the business, about their intention to create shareholder wealth, about their intention to deleverage and reduce the promoter pledge, about their intention to make the accounting practice more conservative, what they have said and what they have delivered. Now, this is something that is there in public. Quarter by quarter, just go through this thread, and then nobody needs to tell you anything. A person who's smart enough will just read this thread and understand what they've achieved as a business. The profits have had gone from 2018, from FY18, 130 crore. It went up to 550 crore in FY21. That's more than 4x in 3 years. And at a time when the leaders in pharma have hardly done anything. We have one bad year. We have 2 quarters where they had a problem in the supply chain in paracetamol. And people have again starting to doubt the company, starting to question their capability, their ability to generate profits, and the intention. But look at what they did in the past 3 years. And I'm sure that companies cannot just companies are not businesses are not run on Excel sheet. Companies will have bad quarters, they will have bad times, but you need to understand whether they have the capability to come out of that. Granules has delivered one of the best return ratios, one of the best CAGRs actually in profits in the last 10, maybe 15 years in pharma. They were right there. They would be among the top 5, 6 companies in the sector. So I don't think that, for us to really try and evaluate this company in short periods makes sense. What we should look at this business is on merit today, where it is. I think the core three molecules which people think are ranked commodity products, they are delivering 30% plus return on capital in that business. And they have made a number of investments which should yield fruit maybe over the next 3, 5 years. So I would agree with what Sajal Bhai said earlier, that just look at what the company's done over the last 10, 15, 20 years. And rather than trying to look at sporadic incidents that have happened over a period of time, unless you have a context on the company that long, if you try to judge each incident in isolation, then you'll end up, having very different outcomes or very different opinion on the companies. So you need to take a step back, really look at the big picture, understand. And to one more point, like Safir Bhai mentioned, right, that the company, there's a noise that the company is up for sale. But frankly, if a company is up for sale, even that is good news, because unless an asset can sell, people won't talk about it being sold unless the company is good enough. So, I would say that rather than trying to look too much into that, as and when the business gets sold, I am sure that it will not get sold at a discount to the, the earnings multiples it is trading today. It should get a reasonable premium. So there is no risk for me that someone else comes and buys it. It's a good business. I'm sure it will have its buyers. So rather than worrying about what can happen on corporate action side or what news is coming every day, every month, we should just focus on what the management is doing, how they're executing, and what are the outcomes.
No, I
Yeah,
just
sure.
wanted to chip in. I just wanted to
Yeah,
chip in
sure,
that
Hasan.
Tushar shared a very good view, and I totally endorse the fact that if the company sells, it can't be at this valuation for sure. It'll that itself will be a kicker, and if it doesn't, then all the reasons that both of you have articulated seem to be very logical.
Yeah, sure. Thanks, Safir bhai, and thanks, Tushar bhai. I will just would like to just add another data point for the quote unquote granules of crap. There is a chemicals company, and this is a market leader in a specific product. They are currently doing the top line, which is lower than the steady state sales of granules if I add paracetamol and metformin, their top two molecules together. So if I add paracetamol and metformin together, the sales that I get is lower than the sales of this chemical company that I'm talking about. The price to sales of this chemical company today is about 13x. It was almost 20x last year. So that's the sort of discounting this chemical company was getting because they are leader in a certain chemical. And the ROCE that they were making back then, slightly lower ROCE today, but let's say their steady state ROCE is about 35%, which is a great ROCE. So a business who is a leader, getting 15 times, 20 times price to sales on about 1500, 1600 crore of sales. Whereas if I look at the steady state ROCE of Granules, if I take the assets that are actually manufacturing the paracetamol and the metformin, the ROCE number in a steady state is no less than 35%. So that's the reason I'm trying to do a like for like comparison, that very similar businesses, they both are their leaders in their respective molecules. They both are doing very similar ROCE. One is getting, at peak was getting 20x price to sales. Today they are about 13, 14x price to sales. So I'm talking about Vinity Organics here. ATBS, 65% of cash is coming from that one molecule, which is also a risk in my view. Because accidents can happen. There is a sudden disruption from USFDA or whatever action. I'm not saying that it's imminent, but there is always a what if scenario that majority of the cash flow is coming from a single molecule. So from that perspective, now you should have to reconsider how you are valuing another leader from India. And the moats on the paracetamol and metformin, as Tushar bhai explained, it's unlikely to um, dwindle or reduce anytime soon. Plus, the company is sort of investing in the right areas. They acquired a biotechnology company to get into this fermentation stroke enzymes space, and I think it's a step in the right direction. They've started also diversifying into other therapeutic areas like oncology, even CNS now. So overall, I think the management is progressive, and it's all there in the numbers. It's just that people don't do the hard work. It's easy to tweet something and say that this company is not good because it's a very high ROC na, koi investment nahi laga, tweet kar diya. But it takes a lot of time and patience to go through the numbers that are not so obvious. So that's something that I wanted to add as well. But yeah,
There's
otherwise I think we have covered it.
there's just one more point. Just sticking specifically on this company and the incidents about the tampering of the the con-call transcript. Now, a lot of people who have actually leveled these allegations, Prince, have actually, they were not even present on the call, let alone present as a participant who had asked the specific questions and who know what was said and how it was said. I was one of the speakers on the call. I had asked multiple questions. I had, in fact, put a actually challenged the management in terms on the call in terms of that whether they're what they're saying and what they intend to achieve. Probably they are being too conservative. I had actually said this to them on the call that they are probably being too conservative or something on those lines. And multiple participants had actually queries around the EBITDA margin or what they can achieve. And clearly, the management had not thought through that point as clearly, or they wanted to be conservative, and they were caught in a situation where people think they have not really given thought on the point. So maybe it was a an overzealous attempt to correct things or to and they had in fact come on media as well and said that they would like to sort of correct that point on about the con call on the margin guidance. So it was sort of a see then that's the beauty. That's also one reason why I really like reading con calls more than annual reports. A thread of con calls, because con calls are done in runtime. It's live. What you say is live, and you are not often thinking through it, and that is where some of the best responses come across. And so this is something that probably happened. It was an incident. Even the transcript tampering, it was not intended to cheat or misguide. It was an attempt to actually correct what they thought was maybe a conservative guidance, and which they had come on media and said also that probably our guidance was too conservative. And it was a wrong thing. Absolutely, it was a mistake, but it was just a mistake. Trying to vilify the management for what was a genuine mistake is like, you've not even attended the call, you don't even know what really happened. But since you've got an opportunity to vilify someone and in the process increase your own viewership or followers, that is what people do. And if we don't know whom to follow and what opinions to really read into, then we'll end up forming our opinion on wrong inputs. So I would say, if anyone is following this company, you should just erase that thought process from your mind that the management intended to cheat or that it was, a very grave mistake. It was a genuine error. These kind of things happen. We are humans, but it is important to put that point in context. There's definitely no intention of the management to cheat. I know this because I was one of the participants asking them the questions, and I know the specific questions being asked at that point and what happened.
Right, Tushar. So, Sajal sir, yesterday you had a tweet on China API King versus an Indian competitor who is growing significantly between 90s and 2022. So,
Yeah, so that is what we have discussed. Exactly. Granules. They
right.
started with API, right? If you go back to their, so that's what I say. You need to go back to the history of the business. They started as a pure play API company back in 90s. You go through those, 1998, 99. So they've been listed since about 1995. So you see, I mean, and China was the undisputed leader, and they have created a serious bloodbath in the API industry. So वही मैं बोलता हूँ कि despite this China bloodbath over the last 20-25 years, whosoever has survived will will now kill China. क्योंकि वही ना, घायल शेर को कभी छोड़ना नहीं चाहिए. अभी इंडिया की 10-15 कंपनीज अनलिस्टेड भी also, so hetero and MSN, those likes of those. So perception is that China is the undisputed, and they have done the dumping, and they got unfair low interest rates, subsidized power, land, infrastructure. That is all correct. And even with that, if Indian companies are giving 100 baggers in terms of cash flows, sales, etc., there has to be an inherent economic moat in the business. Thank you.
Right. So, sir, we have one question from Sahir. He is asking how you evaluate micro caps in pharma and their ability to scale. And what do you look for in management and other aspects, specifically their ability to scale the company?
Right. So that's a great question. I think there is unfortunately no sort of set template for screening any business. And if you're talking about micro caps, I assume that you are talking about sub 500 crore market cap, where most of the time there will not be any sort of earnings call. There will not be any sort of presentation. The annual report will be too dry, not much information being revealed, etc., etc. So I mean, I think for a micro cap, in most cases you will not get a nice looking operating cash flow. The balance sheet may be debt free, and that's where you have to start. So one of my key framework is narratives must match numbers, and numbers must match narrative. They both have to be joined at the hip. If there is a narrative and there is no number, I'm not interested, and if there is a number and no narrative, then also I'm not interested. They have to match, first of all. Now in case of a micro cap, there is nothing to be excited about. So the only thing that I look for, and that's the only thing, is the management. Because I need to get, it's all about jockey. The horse is too weak today. It's all about the jockey. So Wipro at one point in time was an oil company, a micro cap, and then how the transformation happened. Laurus, I mean, when it was not listed, it was sort of a micro cap and pure play ARV API company. So it's all about the management or the promoter or the person in charge. So you need lot of experience to, and there will be several different data points. Maybe I can take some examples where I can just try and explain. So I look for, of course, the competence, the honesty, and the growth hunger, and whether they are walking the talk in the annual report. So maybe one of my recent examples, if I could take, let's take the example of Max India. So I tweeted about Max India recently, and I said ki this will there's a possibility that they can grow significantly over the next 10-15 years, and this is something that I've started looking at very recently. So what I was looking for is a micro cap 400-500 crore market cap company. I was looking at the group. So the group has been a pioneer in healthcare services over the last a few decades. So the promoter pedigree was almost assured. Market cap was sub 400, or close to 400, and against that market cap of 400 crore, they were sitting on assets of close to 500 crore. So 500 crore of assets on books against a market cap of 400 crore. And again, remember my disclaimer up front, right? So this is not a stock recommendation by any stretch of imagination. The company is loss making today, and I don't know if they will be profitable or when they will be profitable, but I'm just sharing my thought process. So 400 crore market cap, 500 crore assets on books. Of those 500, 400 crore is in cash and cash equivalents. So you are getting that business for free. And I was surprised when I looked at the presentation and the earnings calls, the level of integrity and the disclosures. I mean, that was the group's pedigree. And I'll give few more points that I looked at, and I was really impressed by Max India. Again, it's a healthcare services business. They've got two broad divisions, right? There's senior living, and then there is like assisted care, which is the one that I'm more interested in, because senior living is more like a real estate type of business, although it's asset light now. But the division that I'm more interested in, the assisted living, where they provide services like care homes and care at home, medical equipment on rent, or you can buy them as well. So overall, it's a structural business. It should grow as the population is growing and the population is aging. So all those tailwinds, the structural tailwinds were present. The management disclosures were great. And they they also took a charge on the balance sheet. They accepted the mistake that they went into the Dehradun project, which was their first senior living project. They owned the land and everything, and they took a write off in the balance sheet, a large write off, which I always appreciate when a management is candid enough to accept the mistake. And I really appreciated that. So the balance sheet is a lot leaner today after that write off. The promoters are giving ESOP to the management at, I think, about 76, 75 odd levels where the stock is today. So the minority interests are aligned with the management and the promoter. And also there's a buyback. The record date has already passed, so even if you buy the stock, you cannot participate in that. But what I'm trying to highlight is that the buyback price was predetermined. And they were just waiting for the NCLT order to execute that, and they very swiftly executed that as soon as they got the NCLT approval. So again, I'm just trying to give you enough of hints around how to analyze the management, because in micro cap, this is an exception. They are doing earnings call and they are doing presentations. You will not get this in majority of micro caps. So you have to bring all your experience into the game and then analyze what's your take on the management. And that's the only thing you need to worry about, because if the management is competent, if the management is growth hungry, and the management has got ethics, and is trustworthy, the numbers will follow. Numbers will 100% follow. I can maybe give you another example. There was a company of sub 100 crore market cap, and they were reporting erratic margins, sometimes going into losses, sometimes um, thin margins, profitability, etc. But what I liked about that despite being such a small company market cap wise, they were doing 300 400 crore of sales. Even then the market cap was below 100. There was very strong promoter pedigree, and it was sort of partly owned by a large global MNC. So I'm talking about Nitta Gelatin here. Again, disclaimer: none of this is a recommendation. This stock has been surging ahead, and it's definitely in momentum. So if you buy that, very likely you will be sitting on losses a year later. But I'm just trying to give you some more anecdotal and data based evidence, rather, that how you analyze the management. So when I was looking at Nitta many years back, one thing that came to my mind, in addition to the technology advantage that they had due to this Nitta group of Japan being present as a shareholder, as a promoter, as a joint promoter. Part of the stake is with this state government, and and so the governance was kind of taken care of. There's a strong tailwind in nutraceuticals, where they have got a sort of an ancillary role to play in nutraceuticals. The biggest thing that struck me was the promoter stake was above 75%. It used to be 78 79%, and then there was this rule that promoters cannot hold more than 75%. So they engineered a very minority friendly um, uh, solution to bring their stake down to 75%. They decided to issue the bonus. Now, if you issue the bonus, the promoters also get the bonus, and there is no change in the shareholding pattern. So they decided that promoters will not be getting this bonus. Only the minority shareholders will be getting the bonus in the ratio of one bonus share for every 3 years. This was many years back. And that was it. You getting a 300 crore sales company at then market cap of less than 100 crore, with this MNC technology, MNC shareholding, corporate governance, etc., etc. And there were few issues going on back then. They were not getting the compliance approval for one of their plants in Gujarat. So all sorts of challenges the business was facing, and that was the reason the market cap was where it was. But that thing that giving bonus to the minority shareholder, I mean, I've not seen this happening in India. Even, I mean, even with the larger groups. So that was another example. And I mean, likewise, I mean, I can go on and on. DMCC as another example. Again, remember the disclaimer. Very very small company 3 years ago, but I could join their maiden earnings call, and I got a decent handle on the management. I followed it up with regular updates via the earnings calls and annual reports, and that's what I usually do. I look for promoter, nothing but the promoter or the management. Maybe I think we should also let some others, if you've got any view, Tushar bhai, how do you analyze a very small company? I mean, what's your sort of framework? If I could just
Right.
throw the same question over to you.
Yeah. So you already covered a very comprehensive answer, but just from an approach perspective, Sajal bhai. So see, one of pharma in general is perceived to be a very complex domain. Let alone evaluating micro caps or small caps. But even larger companies, a lot of people are uncomfortable with evaluating pharma as a domain because of the inherent complexities involved. So when you compound that with the point that for smaller companies there's less data available in terms of management views, in terms of history of con calls, etc., and plus the numbers. When a business is small and growing, the numbers will obviously not necessarily reflect the long term inherent characteristic. They will be very different from what the business can achieve in stable state. So in this case, what I try to do, and this applies to all sectors, but you look at first you have to understand the broad theme and where the company is in that broad theme. So pharma itself can be broken down further into multiple sub segments, right? Hospitals is a very different beast. Diagnostics is a very different segment. Then within pharma, you have APIs and CRAMs are very different segments. Formulations, generics, formulations again, regulated markets, semi-regulated. So first you understand which is the competitive field where the company is operating in. What is the segment they are really they belong to, and then you try to analyze their numbers and more importantly their commentary, and the overall way the business is being built. You try to evaluate that in the context of the segment they are operating in, and then you try to see whether their numbers can you relate to their numbers vis-a-vis what their leaders in that segment are doing, or what their peers in that segment are doing, right? And then you look for points of similarity and points of differentiation. Points of similarity to get comfort that the company is going as per the template of that domain, and points of differentiation to catch either from a forensic perspective, catch negatives, or to identify what is the right to win, why the company is doing what they're doing better than others. One such example could be leadership in a molecule. So if a very small company is leader in a particular molecule, say let's say they have 20, 30, 40% global market share, then that becomes a very interesting thing for you to look at. They are definitely doing something right, which is allowing them to get leadership in a molecule. Then you look for whether this is an isolated thing, whether they got lucky because of some particular reason, or whether that is a template that they can repeat with other molecules. What has gone behind that? uh, the second thing is that, let's say if they are operating, if a company is operating in a business where margin profile even for leaders is bad in a particular uh, time frame, but this company is doing much better margins, then you would need to really evaluate why they are being able to do it. One reason could be that, so let's say US generics, for a Sun Pharma or for a Lupin, because of the sheer size and scale at which they are, growth may be a challenge. But a very small company, if it's operating in that space, then if they are being able to grow, it could actually be genuine numbers also. It could be maybe they have a good product pipeline and a very small base, so they are being able to grow. Or it could also be a red flag. Then the other thing is that I look at things which are domain specific to the domain. Like let's say regulators approval. If a company is USFDA regulated, that means that there is a certain minimum benchmark that is being established, and this is very important for micro caps and some of the smaller cap companies. That so if you have an FDA regulation, for example, that that the business is regulated by one of the toughest regulators in the world, and so therefore it can't be a total fraud. the business needs to will have certain minimum characteristics that it is representing. If a company is building, let's say, a respiratory portfolio in domestic, then you look at whether it's a one product that they're doing or that they have a basket of products. If they have a basket of products, it means they have a clear strength in a particular area. Then you look at whether they have a right to win or be, can they build a business in domestic. If yes, then if you know it's a, let's say, a 50 crore revenue company, you know that over a period of time this 50 will end up being 100 and then 150 and then 200. Maybe the growth will be very fast or more moderate. You can't predict that, but you think that the company has got all the ingredients to grow. So I would look at basically, so just to highlight, there are, you try to understand where the company is operating in, how they are doing vis-a-vis that entire the landscape, what are the areas where they have a clear right to win, what are the areas where their numbers look debatable compared to the broader universe, and where you can draw comfort from specific points in that sector from a domain perspective.
Right. Sahir, any quick follow-up question, or you raised hand in between, or we are done with your answer?
Yeah, just a quick follow up. Thank you, Prince, for doing this. Thank you, Sajal ji, and thank you, Tushar, for your comprehensive answers. Sajal ji, one more quick question based on what you focused on. You specified promoters and promoter integrity a lot, but do you look at, say, a solid promoter group having similar expertise in a similar field as a big advantage, as well as, suppose it's not a specific promoter group that's known, but if the promoters are a very smart technocrat, uh, do you think these are also advantages and things to look forward to with the company scaling?
Absolutely, sir. I mean, it's all about the promoter's vision. So, I mean, cast your mind back 25 years when Syngene, took birth inside mother's womb. So it was all Kiran's and the management team's vision that, India is in the right place to start offering, these CRO services to Western companies, more like, the IT services model where the scientists or the engineers are getting billed. So it's kind of a cash positive business from day one. Hing lage na phitkari rang chokha, right? So you have to see what their history is, what they have done in their. So again, Max India example, there are many large groups today, where they have got direct or controlling stake in some of these micro caps, very small businesses. They are either not making profits because the assets are not fully utilized today, or they are still in losses because they are setting up the infrastructure or the process, or waiting for approvals, etc. But if there is a listed company where it's a large promoter, you have seen them over the last 20 years or so, their style of operating, their style of governance, so on and so forth, that gives you a lot of comfort to initiate with a very small tracking position. Or you even that is not required, as long as you can have it a watch list which you can just watch very closely. And whenever the smaller business starts performing, showing these cash flows, and the return ratios improving, then you can just go in and take whatever is 4%, 5%, 6%, whatever is your comfort level in that business. So that way there is no opportunity loss. But you were kind of tracking that business from the sidelines, and you jumped in. So you would have to do, track this kind type of a business very closely, because the re-rating usually is very sudden. As soon as the market will get 1 quarter, market will extrapolate it in a jiffy. So 1 quarter of strong operating turnaround, and the stock would double in no time. So you have to be really nimble footed and agile with those kind of micro caps, because remember, there usually be no float, if that answers your question.
Yes. Thank you so much.
Thanks, Sahir. So, Ankit,
Thank you.
you can ask your question.
Yeah. Hi. Thank you, Prince, for arranging this, and thank you for allowing me the question. And I'm a big follower and ardent fan of all three, Safir sir, Sajal sir, and Tushar bhai. So I've been more close to Tushar bhai over the last 2 3 years. So this is one thing which I always have in mind, as in I have no shame in admitting that I'm a novice when it comes to pharma sector. So I think just like me, many I think more than 1,400 people on the call would be interested to know as to there are different types of businesses in the pharma sector. There are businesses where the management is top notch, but then you get the valuation of those companies are pretty high. And then there are, like we have discussed about one company today at the start, where the business is really good, but there has been some questions or doubt in terms of the management quality. And then there will be so many other businesses where probably the management quality is average, but they continue to do well year on year in terms of businesses. So how would you rate? I would. It would be lovely to listen to all three of you. How would you rate these different types of businesses in the pharma sector? Because I personally feel for any investor, any average investor, a layman, uh, generally what happens is that since the we generally find pharma as a very complex business. We tend to side with the management where we think that okay, management will not do well, but probably we miss on the opportunity of creating more wealth by finding out those companies where probably the management is not wrong, but the perception of the management is not so great, and you find the stocks at a much cheaper valuation. So that's my only question. And it would be lovely to hear from all three of you. Thank you.
Tushar bhai, you go first this time.
Right. Uh, so, Ankit, I think it's to some extent an extension of the previous question. I think the philosophy, whether it's a micro cap or a larger company, the philosophy to a large extent remains the same. See, we have to understand and differentiate between investments made to grow the business, challenges that the business is facing, and issues that are specific to certain managements or certain companies. And I'll be very careful. I will not try to name specific companies here, but so just as a pocket, if you see, the top seven companies, top seven, eight formulations, US. Just one second. The top seven, eight formulations companies have had a significant investment phase in the last say 8-10 years. Sometime beginning 2013-14, and really gaining intensity from 2017-18 onwards. These leaders have invested substantial money in trying to build the specialty and complex generics business, as well as grow the non-US piece, because they were facing challenges in the US generics piece. But if you were to actually, take a step back and look at what each company has done, how have they invested, where have they invested, what kind of money has gone in, and what kind of outcomes have been achieved, you will find a very, very different trend for certain companies vis-a-vis the others. Some companies have done substantially better on their investments and on their overall ability to scale up and move to the next level. And some other companies have actually disappointed or not been able to achieve. Now, this could be a case of management focus. It could be a case of management's inability to scale up despite best intentions. It could be a case of intention also. But irrespective what it is, if we understand that a particular sector or an area is facing issues, then we can always focus on other areas which are supposed to be doing better. And we need not invest necessarily in an area at a time when you think that money will not be made. The other thing is that you have to also understand that there is no company that will get everything right 100% of the time all the time. Companies will make mistakes, businesses will face issues. You have to see where they have overcome those issues. I'll give two specific examples from the past here. Now, in the last 7-8 years, regulatory challenges have emerged as one of the biggest bane in pharma. Multiple companies have faced and continue to face regulatory issues. But I'll give you two specific examples of companies where this has not been a barrier to value creation. One of them is Divi's, where they had a very clear issue, a regulatory issue. One of their key plants underwent import alert, and the company was actually able to get the issue resolved in less than 1 year. That till date remains, I think, one of the fastest that any Indian company, possibly even on a global scale. That is a very good example of a company resolving a crisis situation in a very, very short span of time, and actually emerging much stronger in their business post that. The second example I would take is of IPCA. IPCA also faced FDA related issues in multiple facilities, and there was a time when basically this got coupled also with the issues in the tender business, where they were facing pressures, and the company looked down and out, and a lot of people would have given up faith on them. But if you just look at how the company has done in the last 5 years, despite issues to two of their mainstay businesses at the starting of that period, and how the stock is done. So, despite there being challenges in regulatory challenges and a difficult phase, the company actually emerged much stronger, and they have done fantastic in their domestic business. And the stock has been one of the, it has been a very, very good wealth creator for investors who were patient and who understood and stood by the management. So the learning that we have is that you bet on the management. At least I would take a very focused effort to look at the management as closely as the company itself, because eventually a good management will be able to steer a company even out of bad times, and a bad management will nevertheless steer a good company also into a bad phase at some point or the other. So, and I don't go by good and bad by what is available in public domain or social media, right? We build our own data points. Where possible, we look at companies with a 8, 10, 15-year horizon. We continue to interact with or track the management's, guidance vis-a-vis what they've actually delivered over many, many years. We don't necessarily have to invest in a company the first moment we read about it. There are companies where we've invested, 3, 4, maybe 5 years after we first met the management or we first started to do work. We really or we took small positions and we iteratively built a larger position once we got really comfort on the execution. So I place a lot of emphasis on whether the management has a very clear thinking, whether the management can be trusted that if they create wealth, they will deliver that wealth to the shareholders, and that their heart and mind are in the right direction. And if things go wrong, they have the capability to bring them out. So this is something that I place a lot of emphasis. So I don't know if it answers the question, but as a philosophy, there is no good or bad company. Effectively, each company evolves over a period of time, over a number of decisions. It is eventually the people who take those decisions, the promoters and the senior management. So you have to really understand and evaluate those decisions over a frame of time, rather than looking at it as an isolated event.
Right.
Sajal bhai,
Thanks,
you want to
Tushar.
add? Did I answer your question, Ankit, though?
Yeah,
At
yeah,
least
yeah.
partly.
Very good. Yeah. Thank you. Thank you so much, Tushar.
Yeah, sure. I mean, I can just pick up from where Tushar bhai left and just add to that. So, I mean, a couple of days back, I tweeted, and I've been very vocal about this culture of compliance, or what I call jugaad. So, if you just search on my Twitter handle with the keyword jugaad, you will find few tweets where I might be mocking some of these managements, because it's been really frustrating. So, I mean, a couple of days back, I tweeted and I quote that any book of stock recommendations on pharma has to start with a preference on USFDA and the audit linked uncertainty. The index table of that book should have at least 300 odd references to the regulatory compliance and the importance of compliance and the role of management failing to enforce compliance. I repeat, the role of management in failing to enforce compliance. And in India, we have got, lots of examples where these companies are predominantly in US generics, ANDA, those chemically synthesized small molecules, and they are unable to, get their acts together. And some of them are dreaming to, get into the biologics or biosimilars world. I mean, just to, give you guys some sort of comparison benchmark, a small molecule will have, far fewer atoms and complexity compared to, a biologic like a monoclonal antibody, let's say a trastuzumab as an example. So aspirin is a small molecule with just 21 atoms, and monoclonal antibody will have, somewhere in the region of 25,000 atoms. So 21 versus 25,000. Now you may argue that aspirin is a very, really really small molecule, but even if you take, some of the more challenging small molecules, you will not get anywhere closer to that level of complexity of a monoclonal antibody. And if you look at, how many players in India have actually gone into the US market with that level of complexity, that will, tell you something. So I mean, there are many managements in India, large caps, who are, really wrestling with USFDA, and USFDA keeps, slapping them almost every year, sometimes, twice a year. And they are is still, into this chemical ANDA game, which is much lower complexity. And I mean, how they can, progress into the next level, because ultimately the world is shifting towards biologics. Ultimately, that shift is happening. It's very clear in, if you look at the pipeline of the clinical trials, that's where the puck is going. And if you're struggling with a much lower level of complexity, you would definitely struggle with, a complexity which is hundreds of times more than what you are currently unable to grapple with. So regulatory compliance, I think, is the first sort of check, and that's the reason some of the companies I really like have got, a immaculate clean USFDA track record. And not just USFDA, even the Japanese regulator. And to my mind, the PMDA of Japan is much more stringent than USFDA. I mean, Japanese, they they are very particular about, if they take supplies, if there is an innovator sitting in Japan, let's say Takeda as an example, they will make sure that the it's not just unit 1 or unit 2 or unit 5 or unit 7. They will say, is unit ka in this block using reactor number 13? That's the level of precision they want the supplier to commit to. And that supplier can not change the reactor from number 13 to number 12 or number 14, let alone, switching between blocks, or the, the unit altogether. So these regulators are super stringent. These customers who these Indian specialty players are supplying to, they are very stringent. And if you can do this, year after year successfully, then I think, it's just a matter of time where, the numbers will start scaling up, and the music will start. If that answers your question, Ankit.
Yeah, thank you so much. Just a follow-up, if I may. Uh,
Sure.
so, if I got you correctly, does that mean that if you're looking for, in terms of the regulatory hurdles, if the companies have shown a good history or not? So, that means that compared to other industries in the stock market, uh, for pharma, you should be far more vigilant and careful when you are looking at a small cap or a micro cap, because in that in case of pharma, probably there is a lesser odds of those small companies being able to be so compliant. Specifically, when you're looking at the history of India,
Ankit,
is
I
my
think it's the
understanding?
other way around. You should be
Okay.
more careful dealing with large caps, because majority of the USFDA issues are with large caps. If you do
Okay.
Yeah, majority of them are large or mid. None of the smaller players, I'm talking about sub 5,000 crore market cap here, obviously. Most of them, I mean, if you do, how many are clean and how many are not clean from USFDA perspective, vis-a-vis how many large ones are clean and not clean, there are hardly very few. um, every other, including even Cipla, has got one or two warnings from USFDA. So all of them, I think it's not about the size of the company itself. It's about the security of the cash flow, and how fast the cash flows can grow. And if you keep getting disrupted, you are selling a commodity. If you miss the narrow window of opportunity to mint money on the back of that launch, then that ANDA will get rotten. So that's money down the drain. So you are always on this R&D treadmill. You keep filing ANDAs, then you keep getting slapped from USFDA. And those ANDA filings, the effort, the scientific intensity, the filings, everything is down the drain. You start all over again. You get back on the treadmill. So I don't like these businesses, to be honest with you. I mean, I don't like any business where majority of cash is coming from US generics, because that's a pure commodity in my view.
Uh, I'd just like to add a few points to what Sajal Bhai said. Uh, Ankit, actually, again, rather than looking at the size, you have to look at where the organization is present. Uh, so what I mean is, if you see injectable blocks, right? Companies that are that are present into injectables, the issues with regulators have been higher because the level of regulatory compliance required is much more. The regulator is far stricter when it comes to injectable products, and for very clear reasons. So you have to look at oral solids vis-a-vis injectables, how the compliance is. Second, you have to also look at API basis formulations. Typically the regulatory overreach has been much more on the formulation side as compared to the API side. Third, I think from if you look at from a CRAMS business perspective, vis-a-vis a normal manufacturing, when you're manufacturing your own product, typically if you are FDA regulated, you would get inspected on average in about 2 years, once in 2 years, and between all the auditors, there would be one inspection happening maybe on an average 3 to 4 months. But if you are in CRAMS, you're dealing with multiple clients. Each client has their own audit. The plants tend to get audited much more frequently. So, so it's like, if there are two students, just to take an example, if there are two students, one who gives, an exam just once or twice a year, and the other one who gives a sort of an exam once every week, the second student will always be better prepared, b never have a sort of a surprise check or surprise exam coming up, because he's always in a continuous exam mode. It's like if you clean your house daily, your annual Diwali cleaning will not really throw up anything material. But if you clean your house only once every few months, then definitely when you do that comprehensive cleaning, there are likely to be cobwebs that will come up. So, a lot of things go. And then there's one more point you need to understand. Businesses have become far more robust in dealing with regulatory issues. And, so it's like if you are in an earthquake prone area, and at the first time an earthquake happens, you would feel devastated. You not to where to start and rebuild the home. But if when the first time an earthquake happens, but if you're in an earthquake prone area, and you are expecting one anytime all the time, then your ability to deal with it also changes. You build in systems and processes in place that are far more robust, and your ability to deal with those challenges is way different. If you see, so that's where I slightly disagree with Sajal Bhai. I think if some of these larger companies, definitely they have challenges on the manufacturing side with regulators. But when you have a large number of facilities, and when you are, when you have a very very large business in US, and the regulator clearly is looking at you setting much higher benchmarks, and plus a lot of these companies are also getting into more complex spaces, and also sort of on the innovation path. the regulator expects them to set much higher standards. Plus, any person who deals with compliance, like Sajal Bhai, obviously will be able to add more on this. But the regulatory requirements are not static, and they are not cast in stone. What is true today will not be true in 6 months' time, and definitely not in 3 years. So it's not that the companies had to just get this right once and they've not even got that. The regulatory requirements are also moving with time. It's a constantly changing, it's a dynamic situation. And therefore, it is difficult for companies to keep up to it a lot of times. Having said that, there's also an organizational culture thing. Some companies, therefore, are more prone to regulatory mishaps than others, and that is something that, as an investor, if you observe the trends over the last many years, you would be able to pick that point up. That few companies have had much more issues than others. So, like where a DV's got, one of their plants resolved in less than 1 year. Wockhardt has had multiple plants with regulatory challenges which have still not got resolved over last 8 9 years. So that kind of thing, you are able to pick up when you look at it closely. Sadil bhai, you want to add to that?
No, no, absolutely. You bang on, and I completely agree. And that's the reason. I mean, my money is where my mouth is, and I don't like any of these formulations sort of play. And I think formulations in general is a very competitive, cutthroat business. So, I mean, that's what I mean. That's the reason I like companies like Divi's who are pure play. You're not competing with your customer, you're just collaborating with them. And it's the whole pharmaceutical world today and going forward is all about collaboration. The best discoveries, the best molecules will be coming out of collaboration and not competition. And majority of these Indian companies, they started as a pure play API, but just to get into this, I don't know if greed is the right word or whatever, they wanted to grow bigger and faster, and they started venturing out into formulations. But when you use your API, you are selling the same API to your customer, and then you are using the same API to make that tablet or a capsule or whatever, and you are competing with the same customer who you are selling the API in the same market. So that is unethical, and maybe customers, they would prefer sourcing from someone who is not their competitor. And that's where I think, going forward, I see a lot of um, benefits naturally flowing into these pure play API players, and pure play custom synthesis players who are not into this game of competing with their own customers.
Right, sir. Aditya sir, we have one pointed question for you. Charanjeev Singh has asked about in respect of medical tourism potential, JCI certificate hospital have an edge. How difficult is to get JCI certificate? Because in listed space, we have JCI and NABH accredited hospitals. So he wanted your views on this.
Yeah, sure. Thanks for having me. And hi, Sajal. Hi, Tushar. Hi, Prince. Uh, so on the question, I think hospitals per se are great business. NABH certification in itself gives a lot of confidence to most of the patients and doctors that the quality standards have been upheld. But he's right that a JCI, and it's not JCL, I think it's JCI, Joint Commission Competition thing. So JCI accreditations are also uh, much more stringent than the NABH. So there may be some patients who may be coming from, let's say, developed markets or markets which are more advanced in medical treatments. And if they wanted to sort of shortlist a hospital, they may look for a JCI sort of a certification. However, a majority of our medical tourism actually happens from countries like Dubai, Africa, countries which are nearby. I mean, we get some people from Europe and all that also, but majority of it is actually closer by markets where I don't see patients asking necessarily for JCI, but some patients do. So yes, does it give an edge? Yes. Is it Very stringent, yes. How many facilities can get it in India? We'll see over a period of time. As of now, very few facilities have it. It's simply because it's a bit of an expensive affair to get your hospital to that standard where JCI can accredit it. And the process of accreditation itself is a bit lengthy process, tedious and expensive. So, nobody invests money unless you see returns. So unless the hospital chain sees itself as a significant player in the medical tourism arena, they may not necessarily go for a JCI accreditation.
Correct, sir. So Parag, you can unmute and ask your question from the speakers.
Hi, good evening, everybody. Thank you, Prince, for letting me ask the question, and hello to all our speakers. So, my question is not industry or stock specific. So, as a retail investor, I would like to know there are so many companies, so much of data everywhere about company, about the industry. So, how to process all of that to form a view on a company. We as human mind, we have limitations. Unlike, I believe, fund managers have all the infrastructure in place, like a good research team and everything. But as a retail investor, how would you like to throw some light on this? That how can we have a decision making process and how to process all of that data? So I'll give a very small example. So, for example, I try to know everything about DVs in this week. The next week, or probably after 2 weeks, I'll try to read about Loris. And then after that, I'll try to read about Syngene. So, by the time I reach Syngene, I would have forgotten everything about DVs and I don't have a comparable. So, yeah, that's my question on how I can, as a retail investor, tackle this.
Salva, you want to go first?
No, you go ahead, Tushar bhai.
Uh, right. Parag, I think that's a very valid point. And frankly, from an infrastructure perspective, most of the fund managers in that sense are not necessarily much better off. In fact, if anything, you are looking at, say, one company at a time. On an average, any fund manager, let's say in a buy side mutual fund or a PMS, would at a given point be looking at multiple sectors, multiple companies in each sector, and a lot of information overload on a daily basis. So there is definitely that challenge. I think what needs to be done is that first and foremost, your reading should be focused to get a better understanding of the industry as a whole. And when I say better understanding, I don't necessarily mean it from a technical standpoint, right? But sticking to the context of pharma, like I said in the past, uh, multiple times, that you don't look at the entire pharma domain as one, right? Pharma and healthcare as a domain. There are 7 or 8 or 9 different segments. Each segment has different characteristics. The way to evaluate a domestic company, company focused on branded generics at home, would be very different from a way to evaluate a US generics focused company. A way to evaluate API company would be very different from that for a formulations. So first, you break it down to not at a company level, but at an industry segment level. So let's say if you gave example of Davies, Loris, and I think Syngene, right? Now, for you to get a hang on this and you understand where these companies are operating, what is the space, what is the requirements for operating in that space, how is the CRAMS business different from others. So, for example, in CRAMS, I think there are 2 or 3 things that are very important. One is obviously, you need to have a very strong manufacturing process, a very strong process in place to really be cost effective and at the top of the game in terms of being able to produce something at a lower cost. You need to have a very strong team to be able to iterate and keep improving the yield or keep improving the cost structure for the specific molecules, because that is one area that will allow you to be sustainable. But more importantly, a CRAMS company is not going to sell to a B2C customer, so they don't need to have a front end marketing team, but they need to have a very strong relationship in place. So you look at what kind of clients the company is dealing with, what kind of products they are working in, what are the clients they're dealing with, and whether they have a uh, they what is the length of that relationship. If you are able to, these are a lot of things are available in their annual reports and in the con calls, and you try to make simple notes about the strengths and weaknesses of that business from whatever you read. So let's say if you anytime you're reading on DVs, you go through the annual report or you go through last 3 or 4 con calls and identify 8 or 10 points from that domain that you think are relevant for DVs. Then when you uh, go to Loris, you try to compare Loris against those 8 or 10 points. When you go to Syngene, you try to compare a Syngene on those 8 to 10 points. Keeping in mind that no two businesses in pharma are absolutely similar. Unfortunately, this is one sector where each company is a sector in itself, in terms of the number of strategic choices available to companies. But it does not mean that you cannot build opinion on specific segments and you cannot evaluate the common parts of the company, right? So let's say from a CRAMS perspective, you look at 3 or 4 companies in the same space. Look at how many projects they are working on, right? Look at how many different clients they are working on. Look at whether those projects are scattered in multiple domains or whether they are building a very clear strength in a particular domain or in a particular type of chemistry, right? Tomorrow we'll have biologics CDMO evolving as a major area. So you look at whether the company has strength in fermentation and what kind of biologics capabilities they have built, what infrastructure they have built. Try to look at the kind of asset sweating that these companies are able to achieve over a long period. So the basically the best way to look at this would be to, rather than try to study each company in isolation, you will try to do a compare contrast at all points, at all times. That will allow you to, in general, go back and forth and build iteratively a much stronger understanding with every read across all the companies. Sajal bhai, you want to add to that?
Yeah. So I think you have covered most of it, Tushar bhai, but maybe if I could add, so I completely understand where we are coming from. So as Tushar bhai explained, you need to take the notes, because then only you can back test maybe 2 years later as well. So if you're not having your own notes, then you don't remember why you decided to go in a certain direction. So when you're recording about the company and everything, I use a very simple framework. So I'm not a fund manager, I don't manage public money, I don't have any resources, I'm a one man show really. So I use a very simple framework because it's fit for my needs. It may not be right, but it's right for me. So I do four basic pillars of check, and in no particular order, you have to go through all those four. And if only all those four match, then only you decide whether you want to take an exposure into the business, and doesn't matter which is the first one. So I start with the industry structure and I see if that there are any tailwinds, there is any sort of sustainability in this business. And what I mean by industry structure is, if you just go and Google Porter five forces, you'll get buyer power, supplier power, competitive intensity, threat of entry, so on and so forth. So that's what I mean by industry structure. Then management is a very critical factor in my analysis, especially when I'm buying something in India. If I'm buying in US or UK, I mean, management is professional. That's a completely different ball game. In India, I think management is the single most important factor ahead of business. So third pillar, I look at what kind of business is this. What's the I'll pick an annual report about 5-7 years back, and I'll see, read through the management commentary, what their thought process was, and then I will see, how much of that has translated into, the actual performance. So if company is saying that, we are trying to move away from commodity, traditionally a commodity API companies, saying 10 years back that, today we are 100% commodity, and 10 years out we would like to be about 20% commodity. So I'll take a note of that in 2010 they said X, and where they are today in that journey, and whether or not they have walked the talk. So that's another important thing. So management can transform the business. So you ARV, the Loras example, right? I mean, they started with a very sort of basic commoditized sort of molecule, and today look where they are into biologics, they are also into innovator synthesis, and CAR T also they have expressed some interest. So the transformation will happen. Again, Wipro example, it was, you know, an oil company, not an IT company, but management had that vision. So management can transform the business. Don't get too hung up on where this business is today. If the management is right in terms of competence, credibility, honesty, trustworthiness, and growth hunger. So growth hunger is very, very important. And I'll give you some sort of data points, and I've been very vocal about, you know, some of these names. So FDC started operations in 1936. And I would invite, you know, Aditya sir to have his view as well, because some of the companies, you know, he is publicly disclosed that he is holding. So FDC started somewhere around 1935. uh, Indoco is 75-year-old. RPG Life Sciences 40 years. अभी इतने साल से दुकान खोले हो, किया क्या? So look at the sales of RPG, just 400-500 crore, right? If I look at Indoco, 1,500 crore in 75 years. FDC is also in that same ballpark, and they are much older than Indoco. And then if I look at something like an Eris Life Sciences, in 15 years, you know, they have crossed 1,000 crores. If I look at Laurus, in 17 years, you know, they are where they are. And that's the reason for that song, right? Mahiya se chava chava. So I I look at everything, and last but not the least, the fourth pillar is valuation. So you give me the best possible, you know, you give me a clean science type company, I will not pay 50 times sales for that. You give me a Tattva Chintan, I will not pay 20 times price to sales. There is a certain barrier or threshold. I will not, you know, dilute my sort of framework to get into a business, because I like this business so much that, you know, I don't pay any heed to the valuations. No, of course. That's why I said all those four pillars: the industry structure, management, business, and valuations, they have to be aligned, so that I, you know, I could open my purse strings. And growth hunger is very important. And that's the reason I typically don't like companies who have been around for, you know, 7-8 decades, and they have got, you know, no serious sales or cash flow performance to show, because I mean something is missing, right? And then in those cases, if I'm buying, I want to figure out, you know, what is changing. Is there a new management that is coming in, or, you know, what sort of thought process is going on, that, you know, that will likely change the trajectory of the last 7 decades, and, you know, they could grow much bigger over the next 10 years or so. Because you know, I'm not going to make money on the historic earnings. You know, past gone by, bygones are bygones. Jo ho gaya so ho gaya, beet gayi, you know, baat gayi types. I want to put my money into something which is where the perception is very bad today, and that's kind of getting reflected in the valuations. But I see there are serious triggers and there are serious earnings power unfolding that will dramatically change this business 5-10 years out. And then the valuations will also go significantly up, and of course the earnings will go, and I'll get a, you know, compounded benefit of valuations re-rating multiplied by earnings growth.
Aditya sir, same question, but on top of that, one person is asking like they have confusion over whether to average up or average down on existing holdings. So over to you, sir.
Yeah. So firstly, on the question that the previous speaker asked on, you know, how many stocks and how to sort of build a portfolio, or how to select the companies to track. There is no one right answer. I would say Sajal Bhai many a times talks about circle of competence. If you are old enough to be an investor, have enough money to be an investor, I'm sure you are engaged in some kind of a role somewhere as a businessman or as a service professional or as a consultant. You know, when you do that, there are few industries that you interact with. You understand the intricacies of those industries. So maybe that's a good starting point to see good companies, great companies that you interact with, and, you know, in your regular work life, and start studying about them, evaluate their stock prices. Um, on the ability to retain knowledge on what you have read in the past, uh, my version there is slightly different. I see companies as movies. सो सी आपने शोले देखी होगी ना 20 साल 25 साल पहले. बट आज आपको शोले की स्टोरी याद है कि नहीं याद है? तो बेसिकली याद है, राइट? सो वो क्यों याद है? देयर इज अ सीक्वेंस ऑफ इवेंट्स इन द मूवी दैट इज शोन, and you remember sequence A leading to sequence B to sequence C and sequence D. Similarly, if you read companies' histories as movies, this year this is what they tried, they did, this is what they tried, they could not do, this is what they tried, they succeeded, so on and so forth. So the way to do it is take the last 10 years, 15 years, 20 years annual report, uh, jot down from, let's say if you're starting today, jot down from 2000 to 2022 each year key takeaways from the annual report. Once you have done that for 22 years, then again read what you have jotted down from 2000 to 2022 for 22 years. It becomes a movie then, that this is the entrepreneur or the management, this is what they try to do, then this is what, then this is what, and so on, so on, so on. Then you won't forget it, probably. I mean, at least it helps me to retain a lot of information. Obviously, there is an information overload. I am a fund manager. I look at multiple stocks, multiple sectors. It does impact, the ability to retain all of that. But I find this method very useful, just to share with you. Prince, what was the other question that you asked?
Yeah, averaging up and averaging down of
Averaging up
these.
and down. Huh? So see, averaging up or down, both are very useful tools and both can be really, really bad moves. So you have to be convinced about the stock that you have in your bag already, right? So first of all, don't buy anything you're not convinced about. Second, keep monitoring what you have bought, right? So keep monitoring the changes, the events, the results, the commentary, the competitive intensity, the macroeconomic scenario in that bucket. So keep all those evaluations going. And if you feel that, or at the end of the day, the information is telling you or the data is telling you that the company you have bought is right, and then whether the stock is going up or down, you should incrementally buy more quantity, unless obviously the stock has gone up so much that it has become absolutely impossible to justify that valuation, like Sajal Bhai was saying about two other companies in the chemical space. If the valuations are batshit crazy, then you just don't buy more. At least you should evaluate a sell, because at some point even the greatest of stories do become good sells. And same for averaging down here. I mean, if it's falling and if you're convinced that there is a temporary blip, for instance, that happens a lot in healthcare. Temporary blips come a lot in different companies at different points in time. Then you average down. But if the stock is down because the company fundamentally has not delivered, and it seems unlikely that they would deliver on their earlier promises, maybe you'll have to sell lower. So acknowledgement of mistakes can be a very powerful alpha making tool, where if you're able to acknowledge your mistakes, book your losses, move out of stocks when they aren't working out the way you thought they would. At that time, you need to say to the market that, sorry sir, I was wrong, and sell it and move on in life with whatever you have left. But don't throw good money after bad money. That's what we keep saying in our circles. So yeah, I mean, it's all about what your constant monitoring and your constant data information is telling you about the company. If the information is strong, even if the stock is down, you average more. If the information is not so strong, even if the stock is going up, you should evaluate an exit point.
Right, sir. Sajal sir, yesterday you mentioned CRDMO scientist versus generic API scientist. So would you like to talk on that?
So I think I again, before we continue any further, I would like to repeat this disclaimer that none of what we are discussing today is any sort of invitation to act on either side, buy or sell, right? Or even hold, for that matter. We are just discussing our opinions, and we would probably be 100% wrong, so take that as a caveat. So yeah, I mean, coming to that, see, the way is a CDMO is a very abused word. So I see a lot of low quality management abusing this CDMO, because it has become a buzzword. My framework of CDMO is that you're not only supplying that to the innovator, the molecule itself is also patent protected. So it's not a generic molecule. So two things: it's not a generic molecule, and you are supplying that to the innovator. And I'll throw another data here, that there are low single digit companies in the listed space, I repeat, low single digit, that have actually developed or synthesized that molecule in their labs, and that molecule has progressed through the clinical phases and gone commercial, and the same supplier is also manufacturing that. Low single digit number. Majority of the innovator synthesis that is happening today, the innovator gifted the molecule to the supplier, and they had the tech transfer, and the molecule was not originally developed in the labs by Indian scientists. And today the cash flow is, and there is nothing wrong in that, but I mean, I wanted to highlight this point because it tells you about, the intrinsic moat in the scientific capability of an organization that has been through this journey. Because you not only get the molecule live commercial generating cash flows, you get lot of learning for the next project, and you get lot of confidence, and then it snowballs into, what looks like a 200 crore business today, becomes 2000 crores in no time. So that is another important criteria. But to directly answer your question, innovator synthesis is a unit of growth. Every scientist you hire, you are billing that scientist, and there are several models. If you go through the Syngene's presentation, they have highlighted 4 or 5 different models. One of it is profit share. If the innovator or the small biotech hasn't got the right funding, then Syngene may enter into some sort of a partnership with them, that look, we'll do it at a reduced cost, or we'll offer you a discount, or we'll partner you in this, and if the molecule is commercial, we get the royalties or whatever. So there are several models, but I'll give you one simple, where you hire the scientist. It's like IT consulting. You send your consultant, you bill that client, you pay salary to the consultant, and the difference is yours to keep. So that kind of a business is kind of, cash positive on day one. All you have done is setting up the infrastructure. You can rent a lab, you need to buy the equipments, and then you are up and away running, right? And the scientist is paying um, their own salary, right? And through the billing. So it's a cash flow positive business right from the word go, as against, a generic business where the scientist is working hard to do the either the generic filing or otherwise, and if they are not billing, then the company is paying for that. So the cash burn is happening at the company level. And that is the reason, if you look at Syngene with 5,000 odd scientists, their R&D expense is zero, because they are not spending their own money, right? Is the client's money. क्लाइंट का खर्चे से सारा काम हो रहा है. If molecule fails, Syngene gets the billing. If molecule is a success, Syngene gets the billing, and maybe the opportunity to participate in commercial supplies. That's the kind of model that I like, rather than this treadmill wala under file karte ja rahe ho. You are burning cash, and you get slapped from USFDA, and then all that money is down the drain. So that's where the difference is your scientist a revenue generator, or is your scientist a sort of revenue or cash consumer, that they are kind of eating into cash? That's one model. And the other model is that the scientist is kind of generating cash for the organization. If that answers the question.
All right, sir. Sir, we have a similar question on this. Yogesh has asked Syngene with the why don't they make a product which a Newland, a Loris, or a Suvain do make? Is it because of their manufacturing capabilities or patent filing?
No, it's the business model. Collaboration versus competition. Simple. Nothing.
Right, sir. And sir, very interesting question. Like, since Biocon has certain percentage of ownership of Syngene along with its own standalone biosimilar business, so if someone has to choose only one out of these two in pharma sector, what would be the choice, Biocon or Syngene?
Right. So before, so I've got my answer, and I will answer that with full honesty. But I know Aditya has got a slightly different view on Biocon as a business. So maybe for everyone's benefit, if I could invite you, Aditya sir, to maybe just chime in with a couple of minutes, and then I will just present my view, how I see both businesses, and what would be my sort of preferred option.
Yes, Sajal sir. Sure, sir. Sir, so basically, on the Syngene side, me and Sajal, I think we have the same view. Uh, it's a business which has been incredibly profitable, incredibly difficult to build, and very, very difficult to replicate, and highly time consuming to build that kind of reputation and that kind of clientele that Syngene has been able to build. So I don't see any difference in my and Sajal's views on uh, Syngene. And I think the market views also on the same lines. So it's basically a consensus today that it's a great company. Um, and this is not a buy sell recommendation. I manage public money, so I need to repeat the disclaimer that I am SEBI registered, and I am a SEBI registered portfolio manager. Whatever I am discussing is my personal opinion. It's not the opinion of my house, and this is just for education purposes. No buy sell hold recommendations at all. So yeah, Syngene I think is a great company in consensus as well. Coming to Biocon and biosimilars, my view on biosimilars has always been, I think, from the past 4 years, I've been maintaining the same view. I've gone wrong, I've gone right, and all sorts of things have happened. But I haven't seen the data to change my view yet, which is that biosims are essentially complex generics in a way, but they are generics, and because they are generics, they will have their period of sunshine. They will have their period of sort of limited competition, high ROE or high margin, for a brief period, each product. And then eventually it will get commoditized because I see too many players coming into the biosims area. I see already 30-35% price erosion in that space year over year, despite only 4, 5, 6 players in the market for a given molecule. And I see innovators fighting tooth and nail for their protecting their market share. See, the innovator business model on the biologic side is highly difficult also, because unlike small molecules, where they were able to sort of come up with many drugs in a 1 year, many launches, new novel launches in 1 year. In biologics, the innovators are not able to launch many products in 1 year. They launch 1 or 2 products in a span of 3 or 4 years. Sometimes a few years go by without any launches as well. So what happens therefore is it becomes very important to retain your patient clientele in your older products, so that when you launch a newer therapy, you can just switch your existing clientele from the older therapy to the new therapy. So the customer acquisition cost in biologics is far higher than the customer acquisition cost that was there in the small molecule business. Therefore, the cost of losing a patient is also far higher than it was in the small molecule business. And therefore, while in the small molecule business, these same companies, they yielded their patients to the generics. They did not fight tooth and nail. In most of the small molecules, they did not fight tooth and nail. In some molecules, they have. I'll give you example of Copaxone. I'll give you example of aripiprazole. I'll give you so many examples where, despite 7, 8, 10 generic companies, the innovator is still holding on to 30-40% market share, which is not normally the case, right? Now that is happening because they want to retain the clientele. They are competing with generics as innovators because they want to retain, and therefore in biosims I see them doing that very, very aggressively, and therefore I don't see biosimilars being a sticky, secular, growing cash flow pool, which is what an average investor generally rewards. So that's my view. Yeah.
Yeah, so maybe if I could add, so between Biocon and Syngene, again, as a disclaimer, I'm invested in both. I am not adding Biocon for almost couple of years now. By and large, I also reduced my holding in 2018, and I tweeted. So all those tweets are still there if you want to dig out, and if you can't, let me know and I can share those with you. So because the valuations were sky high. I think in 2018, Biocon as a business was about 40 times EBITDA, and for that kind of competition wala business, I think 40 times EBITDA is way too high. I can pay 40x EBITDA for innovator CRAMS, So even if Syngene trades at 40 times EBITDA tomorrow, again no recommendation. I won't touch this stock. I will wait for maybe it to get back to 30 times, and then I'll continue my SIP. But there is no way I'm gonna dilute my holding just because the valuations are rich. Because my core belief is that a great business will never be cheap, right? So that's one. So definitely Syngene is a much better business because it's all about collaborative model versus the competition, etc. But let me clear one myth right away. Biocon is not a pure play biologics or pure play biosimilar business. It's not. It's a because of the stake that is it Biocon as a group has in Syngene as well as on in Biocon Biologics. The base business or the standalone business is absolutely free at the current market cap. You can do the math. If you do the sum of the parts, and correct me if my understanding is wrong here, Tushar Bhai and Aditya, please. My understanding is that the inferior or the dirty business is absolutely free. अभी मुफ्त में कोई कुछ देगा तो मैं मना नहीं करूंगा. So that is the reason I'm still holding Biocon, and there is also a level of a degree of optionality in this business, whether it's Biocara or their renewed thrust on the fermentation APIs. There's a large capex that will go live next year, so there is optionality built into this business. तो फ्री वाला धंधा है. मैं तो जैसा है एज इट इज मैं उसको होल्ड करूंगा. बट हाँ, मैं SIP नहीं करूंगा. आई वुड डेफिनेटली आई ऑलवेज लुक फॉर अपॉर्चुनिटीज टू ऐड मोर Syngene. बट Biocon 2018 में it was damn crazy, and I always share if I change my sort of stance on, if I've been very vocal about either way about a business. If I change my stance, I definitely tweet, because my core philosophy is quote unquote sab saath badhe.
Right, sir. So we have, yeah,
So,
Tushar.
yeah, if I may just add a couple of points here. I think very valid point mentioned by Aditya. In fact, what's going to happen in biosimilars eventually, this is just from a regulatory standpoint, the people who deal with the sector more closely would be aware that the regulatory, side of things in biologics and biosimilars specifically, the pathway to approvals has been evolving, right? So it was, by how biosimilars would get approved, how there would be, substitutability with the biologic. It's an evolving field of regulation. A lot has changed in the last 3-4 years, and one very important point to note here is that unlike in the case of small molecules, in the conventional APIs, in case of biologics, it is the biologics companies themselves who are also entering into biosimilars in a very aggressive way. So you are defending your product in one space, and you're also trying to attack someone else's space. So most of the leading biologics players are also working on biosimilars for their competitors' products. So what happens is, as these companies, enter the field, they are also making regulatory pathways more clear, and they're actually opening up opportunities for the other players also. So what I mean here is that, if let's say someone like a Roche or Amgen or one of the leading biologics guys is working on a biosimilar product. Now, historically, there was a requirement to, for the biosimilar to, since biosimilars are not small molecules, you're working with whether it's a mammalian cell or a microbial cell, you're working with effectively a live, with a much more difficult category of molecules in that sense. You have to, and no two biologics, no two biosimilars will be similar, absolutely similar to each other. So the regulators' requirements to prove, similarity in efficacy and toxicity profile, or the overall regulatory requirement was very tight. Uh, as these biologics companies have entered into biosimilar space, they have actually highlighted a lot of cases where the regulatory requirements were too stringent or taxing, and which actually were not required. So they are actually easing the regulatory pathways as they also end up competing in these spaces. So this is actually possible over the next few years, that you will see substantial relaxation in clinical trial requirements for biosimilars, and they may well go down the path of how it is like ANDAs get approved today. Something very similar may happen for biosimilars over a period of time. What this will do is this will disrupt the entire space. You will have a lot of companies enter into the fray, which are which even today there's still restriction in individual molecules, how many people are competing. But eventually, you will find that most of the large companies are present in all the molecules over the next 3 to 5 years. So increasingly, you have to see where the value will get created. Possibly, I think CRAMS would CRAMS, and it will be a blend of CDMO, CMO activity in that sense. Will end up being a very, very profitable field over the next 3, 5 years, maybe 10 years on the biologic side, as well as what is like a branded generics business today in say India and ROW. A very similar thing could happen on the biologics side. That you have biosimilars launched in India by a lot of these Indian companies, and once they are able to create a very strong market for themselves, that business may end up earning a much better value than say being a competitor in biosimilar in US or Europe. I mean, it's far-fetched to think of that today, but over the next 5, maybe 10 years, it's a very distinct possibility that it could happen that way. Like how today domestic branded generics business gets much higher value than US generics business. The other thing is, I think, irrespective, it is applies to all industries. If there is a very, very large profit pool that is to be, that is up for grabs, you will have multiple competitors coming in, and I have extensively talked about it in the Alpha series as well. That what was the generics model earlier was the fastest fingers first type of model. The first to file para 4. You try to enter a space before everybody else enters, and you try to get as much value in a product which is declining in overall value. So when the molecule gets ranked generic, it will get completely commoditized. The market will shrink by as much as 95, 90, at times even 98, 99%. So a $10 billion drug could come down to maybe 40, $50 million in size. So the companies entering in knew that they had a limited window of opportunity, try to get the maximum out in that window. Whereas what's happening now in the generic side is companies are entering what were so perceived to be dead areas, 15, 20 players in a given molecule, and hardly any market share for an individual player. And as some of these cost leaders emerge, they continue to gain market share at the expense of some of the bigger companies who exit these products because they are tail products for them. So it starts with 15 players, it comes down to 12, then maybe 10, then maybe 8, and then maybe 4 or 5 players remain sustainably, and the company which has been a late entrant may end up getting a disproportionate market share. So the model is changed in generics, and I think at some point the model will change in biologics and on the biosimilar side. That it will no longer be that you are in US and you are there first, but it will be in a commoditized biosimilar, whether you are able to extract the value, and there the focus will be a lot more on the cost side, on the process side, on the superiority of your process, and how you are able to build the business.
Right, Tushar. So, sir, we have 3, 4 questions on Piramal Pharma. So, before coming to Sandeep, I'll ask those questions. So, they're asking about the demerger thing and view on the business after it has started to be to give more disclosures in calls and presentation. And also, one question is the pharma arm of the Piramal is like 15% is available at price to sales of 1.07. So do you think it is unvalued, and how you see the acquisition of Yapan Bio and one more yeah, Sajal sir?
Oh, is it okay? Right, right. No, so yeah, so Piramal, I've been tracking over the years, and I also covered this in my ISC Alpha Series 18 in June 2020, and I have never been happy with this unrelated diversification, right? So I never liked their financial services business, and I've seen enough of financial services in my career. I know that the loan disbursements happen. They give you all sorts of joys and bells and whistles, and then the defaults and NPS come and bite your bum later on. So I mean, financial services is not a business that I want or was ever interested in, but pharmaceuticals was. And within pharmaceuticals, again, a disclaimer that none of this again is sort of investment advice, but I see this as a sum of parts business. The best business that I like in Piramal is not their what they call as CDMO, and again I'll clarify why it's not pure play CDMO, but I'll come to that later on. The best business that I like in Piramal is their OTC business. Zero USFDA. It's an FMCG business, right? Growing twice as fast as any FMCG in India. Khel khatam. So this year they should be getting close to, if my math is right, and again please correct me guys here, because I know you track each and every company in this sector. My back of the envelope is 900 odd crore, 850 to 900 crore of sales in their OTC business, which is a branded, very high entry barrier business. I mean, in India, you are giving, unbranded generic chemical companies B2B, which is kind of having, a shade of commodity as what, 15 times, 10 times, 20 times, jo bhi matlab kuch to bhi. I think FMCG, a high quality FMCG business growing at about 25% CAGR deserves 10 times price to sales. So that's the division I like the best in Piramal. The second one is what they call as CDMO. It's a mix of CMO, fill finish, and innovator CRAMS or innovator CDMO. So it's a mix. It's not a pure play innovator CDMO, but it's a high quality business. Couple of risks that I see in this business is a lower asset turns, because their capex and opex is higher. They are operating in overseas jurisdictions, markets like Europe and US, and that's the reason the capex and opex will always be higher than from compared to a player who is operating out of India, because both capex and opex are lower in India. So that's one thing to watch out for when you start putting a multiple against that sales number. And the other thing is, of course, is it's a CMO in addition to CDMO. So the multiple that their CDMO would enjoy would be much lower than something like Syngene, right? So that's one. But I think in my head, I I mean, I can give this business, even if I give it a lower multiple, whatever that multiple is, you can decide. Um, the sum of parts is giving me a number which is very comforting. And when the market cap very recently was close to 35,000, I thought that the kachara business, which is the financial services, is absolutely free. But again, it's a risk that if something happens mid-flight, while I get decoupled from this kachara business, I mean, there may be a problem, because if I've not fully accumulated. I've just taken my initial tranche or two there, just to have some exposure, some skin in the game. And then the third business that Piramal have is the hospital generics business, which I think is a much better quality business than any of these Indian generic players operating out of the US. They've got high complexity. It's all about relationship, inhaled anesthesia, intrathecal portfolio, and all the rest of it. So I think that business doesn't deserve a pure commodity wala multiple that the other Indian generic large caps definitely deserve. So if I do a sum of parts, net, I was very comfortable with the market cap when the stock was, in the region of 1600, 1700 recently. And that's the reason I tweeted. And I also, gave my ballpark. If you search on my tweet with hashtag UV_PEL in 2018, my back of the envelope guesstimate was that, by the end of this year, December 2022 or early January, February 2023, pharma business alone could potentially command a market cap of as high as 40,000 crores. So that tweet is also there, and I explained, in summary what the reasons were, etc. But I know the others who are there, Aditya and Tushar, they track this business much better than what I do, and they will definitely have some counter questions or some negatives that I might have missed.
Yeah, Aditya sir and Tushar sir.
Yeah, I think I have nothing else to add to what Sajal said. I 100% agree. Actually, Piramal Pharma business, last I counted, has 8 verticals. So OTC by far the most lucrative and attractive. But then within the other 2 verticals that they report, they have 3 verticals within each of those 2. So that is generic customer, innovator customer, and backend. So pretty complex business, to be honest. I have not concluded on my research on Piramal, so I would avoid, saying anything further on that. But broadly speaking, I think Sajal is right. I mean, you just have to do the SOTP on the pharma side, and I don't think you will arrive at a very different conclusion. Over to you, Tushar bhai.
Yeah, I think we probably share very similar views on the OTC space. I think one point to highlight within OTC, some part of the business is a distribution business for one of the other brands, which is probably be a lower growth business, but their own OTC franchise that they're building up, I think it will see a dramatic growth trajectory over the next 3-5 years, and that business could get very highly valued. There, I agree with Sajal bhai that that business is essentially a probably the could be the driver of optionality in some ways in how Piramal gets valued as a company on the pharma side. On CDMO, I would slightly disagree with Salbhai. I think you know while there is a mix of CMO and CDMO, and not all of it is innovator led, but the part that is innovator led business, it's a very high quality business, and I think they are growing that business. The overall margin profile of the company is probably not commensurate with what the capabilities are today. I think that over the next 3-5 years, you will see a significant difference on the margin profile, on the positive side. And I am positive on the CDMO business. I have like Aditya, we've also not completed our evaluation, and I will not give a recommendation either way. But I think it's an interesting business. It's a company that has got deep-rooted capabilities. They have created value in Piramal Pharma earlier, and they have been able to successfully partake that value. Successfully divest one business earlier. They have been working in this industry for 15 years. They, the credentials are very good, and I think it's definitely an interesting business worth tracking and seeing how they evolve over the next few quarters and years. I am very excited to have that company list separately so that we know much more about it and we can take a more informed view.
All right, Tushar, thank you. So we have one question for Sandeep from Gaurav Datta. He's asking patent dispute between Novartis and Government of India and how it is affecting R&D investment activity by big pharma MNCs in India. After losing the patent right, Novartis stopped launching any new drug in India and also reduced the R&D spend. So he's asking views on this.
Uh, Good afternoon, friends. Since today's session is recorded, I'll have to be mindful of my language, uh, unlike the last time. But let's start with the query. And I think two different issues are being mixed here. Uh, the issue of R&D in India by an MNC company versus the issue of sale in India by an MNC company. And by itself, both these issues have to be examined vis-a-vis the Novartis patent battle. Now, if I remember, the Novartis patent battle is almost what now, 12, 13, 14 years old, since the imatinib molecules judgments came out, and I believe you're referring to the imatinib judgment. So now, personally, I think India has not done anything wrong in the context of patents against Novartis. So, with that as my founding statement, we look at both the questions you have raised. Uh, they are doing R&D and they are doing sales in India. Now, for doing R&D in India, I believe that Novartis does not do any R&D in India. Yes, that is a fact. But then, most innovator companies globally don't do R&D in India. That has got nothing to do with their battles with Indian government, because there are none. So we need to then understand why innovator companies don't do R&D in India, and that can be probably examined from different lenses. They may be uncomfortable with the skill set. They may not want to have a permanent establishment. They are anyways reducing the number of R&D centers globally. If you see, on a global level for the last many years, R&D budgets in MNC companies have been much lower than marketing and sales budgets. So why an MNC innovator company does not do R&D in India? It cannot be correlated to only one court case. Number one. Now, coming to the second question, why a particular MNC is not selling molecules in India, I think that again needs a deeper discussion. Most innovator companies do not launch their patented products in India very early on. India probably is amongst their second or third wave of launches, and that is more an expression of the Indian buying power, their pricing power, their assessment of how many sales units they can get, etc. I today do not think that it is only the patent related issues that stops a Novartis from launching their patented products in the country. At this point of time, I also want to highlight one unique thing. Even the patented products that are launched by Novartis or any other company in the country, they are not usually launched through the listed subsidiaries. The market experts here, Aditya and all, will understand the significance of this much better. And it is a question that needs to be asked by Indian shareholders to MNC companies, that why are you launching new products in India only through your unlisted private subsidiaries, which are not the property of the Indian shareholders but are property of the global holding company directly. So I don't know if I've directly answered, but I think your correlation that one Supreme Court case is the reason that Novartis is not doing R&D and is the reason that they are not selling patented products in India, I think that correlation is not well founded.
Hi, can I add my two bit here?
Yeah, please.
Yeah, just to add to what Sandeep was just mentioning, right? You'll have to actually check the revenues of listed versus unlisted companies. Plus, there is a counter argument to your hypothesis that if people are not launching like the patent protected molecules, but there is a company called AstraZeneca which has continuously been launching. Like last week itself, Olaparib was launched, which is a breast cancer drug. It got the DGCA approval in India. So multiple MNCs are doing different work. You'll have to check actually like why the whole gamut of R&D versus non-R&D molecules is not the case with every company.
Very good example by Rahul. That yes, I hadn't tracked this molecule because it's currently not in my visibility area. But the fact does remain that yes, MNC companies do launch their patented products in India as and when it suits their business plan. Please understand that regardless of whether they sell or not, they have their patents in India in the right place. So it is not very easy today for Indian generic companies like the 2005-6 years की आंख बंद करके कुछ भी launch कर दिया. A company wanting to launch products in the market today, which are high-end molecules, they'll have to spend some time and effort on doing their patent checks.
A classic case would be if people look at the documentation of Netco Pharma and the kind of litigation it wins or loses, even in the domestic space and its launches, they'll get a fair bit of idea like how many new patented molecules are being launched by the MNCs.
And I think Novartis is launching its new molecules. For example, one of the couple of years ago, and here I would like to disclose, Today JB has purchased Azmada from Novartis in the current calendar year. Azmada is a global patented product which contains valsartan sacubitril, and Novartis had launched it in India a couple of years ago on its own. Plus, they have given it to as a distribution license to other companies also, and they all sold these branded IP to different companies in the calendar year 22. So it is not directly fair to say that Novartis is not launching, R&D proprietary molecules because of a Supreme Court case. I think there's too much being read into it.
Right, Sandeep. So, Sajal sir, Aditya sir, Tushar sir, anything on your part, or shall we move on to next question?
I
So
think the
yeah,
experts have spoken. I think probably not much to add on my side.
Right. So, Sajal sir, I'll ask on time how good we are on times. We have so many questions left, so I need to ask you.
Yeah, I think we can just prioritize, maybe go on some sort of a rapid fire, and if there are any, because we have been over 2 hours. I'm good for another 40-45 minutes, absolutely no issues, but I'm not sure about the others, and there's no point just me answering all the questions without any sort of counter view.
Right, sir. Aditya sir,
I
you
think
were saying
10.
something?
I was saying the lesser said about the MNCs, the better. Yeah, I mean, I completely agree with Sandeep that कोई ऐसा counter, मतलब कोई ऐसा correlation तो है नहीं. That's a 12-13-year-old case. And Rahul also made a valid point. AstraZeneca has been launching some products, but on the same ground, I would say कि AstraZeneca का Covaxin तो नहीं आया इंडिया में through the listed entity. It came through the parent directly. तो पता नहीं यार. I mean, because they don't talk, because they don't write, इनके annual reports पढ़ो तो एकदम bland. Majority of them, at least. Nobody knows what they're thinking, what the strategy is, and how they view India. They don't launch the innovative products in India at the same time as they launch it in US and Europe, because the price in US and Europe is 40, 50, 80 times at the price they can charge in India. And then the consumer groups there start shouting that if you can sell the same molecule in India in 100 rupees, why do you need to charge $120 in US? And that becomes a challenge for them, which is why they sort of don't launch it at the same time, and later somebody will sort of काम करता है. But it's difficult to understand those strategies and how they work. So I, for one, asset manager, I stay away from a majority of the MNC pharma companies because they're very, very difficult to read into. Yeah.
Right, sir. Midhun, you can unmute and ask your question, please.
Am I audible?
Yeah.
Good evening. I have one question to Sajal sir. Sajal sir, in his recent IIC webinar, mentioned that if Neuland can't scale a molecule, then even Loris or Syngene can't make that molecule. Can you please share your rationale behind this? Any past examples or any past scenario? That's my question.
Yes, sure. I mean, no problem. So before I answer your question directly, let me give you a small story, which is a real life story of a business. So the story goes, the margins collapsed 1,000 basis points. I repeat, 1,000 basis points between 2011 and 2018. So if the starting margin was, let's say 25% in 2011, in 2018 they collapsed to 14-15%. Right? So उस period में 1,000 basis points का collapse हुआ margins में. What kind of management is this? Terrible, right? 1,000 basis point margin collapse हो गया over such a long period of time. We're talking about 7 years, not a sudden 1 quarter, 2 quarter thing कि कुछ accident हुआ. So that's a terrible management. However, in recent years, there has been a complete transformation. And what's the management's perception today? The perception is on North Pole now from South Pole. So 2011 से 18 के बीच में, that was a terrible management because the margins were collapsing, the business was going nowhere, and today is the best in class management. This is SRF, by the way. And remember the disclaimer and caveat, guys. So I'm just giving you enough examples so that you could learn to do your own fishing rather than coming on Twitter or WhatsApp and waiting for koi stock tip mil jaye. That's the sole purpose. Now, coming to your question, you have to go into the history of this business first, क्योंकि फ्यूचर तभी पता चलेगा जब पूरी हिस्ट्री पता हो कि क्या हुआ, क्यों हुआ, कैसे हुआ, क्या कब हुआ, right? So Neuland today is transforming in that they are in flight. It's an ongoing journey. They're transforming from 100% commodity to, in my view, less than 20% commodity a few years out, and they are somewhere in the middle. So it was a pure 100% commodity business around about 2012-13 period. And today, the commodity as a percentage of overall business is reducing. And if you look at the gross margin, a commodity business, tell me one API company in India which is in commodity and showing 60% gross margin. एक भी बता दो. And that's an open challenge to everyone who is listening. You tell me one commodity API company in India. So it's not a commodity anymore, right? It used to be 100% commodity. That's point number one. Will the SRF history rhyme here? I don't know. Future is unpredictable. So I would wait and watch. But to answer your question directly, what I said is absolutely correct. And here is a global champion. I'm not just talking about India. In deuteration chemistry, Neuland is a global champion. How many API players have taken a molecule through the entire commercial, through the entire clinical stage, all the way to commercial in deuteration chemistry? So this molecule was clinically developed by Neuland scientists, and this is the reason Neuland's employee expense as a percentage of sales is highest in the industry. It's about 20%. It tells you two things there. One, they are paying their scientists handsomely, they are hiring well, they are looking after those scientists well. And it's a large pool of, for given the market cap. I mean, Divi's has got 400 scientists, and look at their market cap. This company has 300 scientists. So given the small size of the business today, they are handsomely paying their scientists, and they are creating the business from scratch, so to speak. देखो, स्पेशलिटी बिजनेस बनाना, इनोवेटर सिंथेसिस बिजनेस बनाना बच्चों का खेल नहीं है. There are significant entry barriers in this business, and management perception is that they are not executing. And I'll give you a number. Their innovator synthesis business in 2014 was just 50 crores, 50. Last year they reported 280 crores from innovator synthesis. That's a CAGR of close to 23% over a long period of 8 years. If that is not execution, what is, I don't know. And they never said in any of the annual reports that they want to be fully backward integrated at the KSM level. So this all tantrum and noise about levricitam, this is all eyewash. Their ultimate objective is to possibly do zero commodity if they can. But because of the relationship with the innovators, because some of the innovators are also having these generic molecules, they will continue to support molecules like mirtazapine, labetalol, levricitam, etc., etc. But there is absolutely no point in doing backward integration, because my math tells me that there will be a bloodbath at the KSM level. Indian chemical companies will start producing all sorts of KSMs over a period of time. There is drought in China. There are all sorts of problems in China. Sustain nahi kar payega. Chemical will explode, the KSM and the intermediate manufacturing in India. And the only reason or the benefit that you get out of backward integration is three. A, you get supply security. B, you get the price, right? Because you are making it in-house. And C, you control the quality. If all these three factors are readily available in the market, then why you are blocking that capex at such a low asset turn? Because 4-5 years out, when KSM intermediates are freely available, you will struggle to get one-time asset turn on that gross block. that is, giving you KSM. So अभी तो बहुत अच्छा लग रहा है सब, ये backward integrated है तो बहुत अच्छा, नहीं है तो गधा है management. Just imagine the scenario 4 or 5 years out. So I've given you, enough data points around that, to sort of, put your own multiple just to their synthesis business today. And my view is this 23% long-term CAGR is all set to improve going forward, because 3 brand new molecules have just gone live. And if you read through the management commentary, I think the second half will be much better in their synthesis business. So it may be Q3, it may be Q4, it could be spread across Q3, Q4, I don't know. But I believe that this 23% CAGR on their innovator synthesis can improve to 25%, maybe all the way to 30% over the next few years, because a lot of molecules are just hitting commercial, and it takes 2-3 years to get, these molecules well established in the markets before the revenues start coming up. So if your scientists have got the capability to progress a molecule from phase 1, phase 2, phase 3 all the way to commercial, that's a very significant entry barrier, which competitors will find it very difficult to emulate or copy. And just to clarify, my channel checks and my research confirms, I repeat, confirms that Neuland is partnering very closely with some of the A-grade innovator synthesis companies in India, likes of Syngene and Piramal. So they are not competing with these. There's a more of a collaboration. It may be one molecule collaboration. It may be more than one molecule collaboration. So that's the reason I said, Neuland's competitor is not Divi's or Laurus. See, why innovator would come to Divi's or Laurus? Simple. If they want a very large volume, these are volume champions. So molnupiravir and Paxlovid, they were large molecules, and they had the capacity to support those. But is it a sustainable business? And I tweeted this again yesterday, right? So don't extrapolate, one time gain into a 10-year, 15-year runway. But innovators have got no choice. If they want a large volume to be commercialized quickly, in a matter of few months, then they do the tech transfer. Tech transfer doesn't take more than 6 months in small molecules. You can do the tech transfer, and then the supplier can start, all guns blazing. The reactors would be running day and night, and you start throwing. That's exactly what these two guys are good at. But you give them a molecule and ask them to, progress that through difficult deuteration chemistry, or peptide for that matter, or whatever, through the various clinical phases, and the picture may look very different. That's my view, but I definitely would like to invite, counter view from experts. There are people who track this industry far better than I do.
All right, sir. Sir, one question, Aditya sir. Different bioenzymes require different temperature. Does India have that storage infra to scale it to world level?
एंजाइम्स में मेरी स्टडी थोड़ी वीक है, so it's not my area of competence. But yeah, I don't know if Tushar or Sajal or some of the other speakers want to answer that. I don't know much about enzymes to comment on this.
Oh, just
Tushar
one
bhai?
point. While I will not comment specifically on enzymes as a space, I think the comment on infrastructure capabilities. Now, there are Indian companies that have developed their own clones, right? There are companies that are doing end-to-end work in biologics. Now, anybody who tracks biologics would know that the master bank that needs to be stored for for your own clone, we are talking of minus 180 degrees centigrade. This is like cryogenic storage. So that kind of facility, that kind of infrastructure is available. Obviously, it gets built to a certain cost. It's not something that will be easily available, not something that all the companies can do or will do. But I don't think, in fact, not just pharma. I don't think any industry today, infrastructure or technology is a barrier to Indian companies. Now, even on innovation, just as an aside, on IP, right? The problem not necessarily would be whether Indian companies can actually do IP or not. Even in if you look at regulated markets, a lot of the research is actually done by universities, by academia, because the kind of patience that is needed, 8, 10, 12 years to work on not just one molecule, but a pipeline of, hundreds of molecules. That kind of patience, not businesses may not necessarily have it, and the investors of these businesses may not necessarily appreciate. So I don't think basically the infrastructure is a problem. And I've seen enough examples. In fact, I personally visited facilities where this kind of infrastructure is available.
Right. Sajal sir, any input you have, or shall we move on?
No, I think we can move on. I mean, I have tweeted a lot about biocatalysis, enzymes, biotechnology. There is a full 5-hour webinar on that. So, I mean,
Right.
in the interest of the time, I think we have to move on.
Right, sir. So, sir, one Gautam Gupta has asked CRDMO business comparison of Jubilant Pharmova versus Syngene.
See, it's all there in the numbers, na. They both started around the same time. One business is not even got 100 scientists. Look at their revenue versus another one with 500 scientists. I mean, Rakesh ji, he went on that call. I shared that recording very recently, and he kind of exposed, the sort of lack of execution. That's what I call lack of execution, because you have been in the same game around the same time. Your same player from India is significantly higher in sales than yourself. There's something around the execution on that perspective, for sure. But there are people who better track Pharmova than I do, so maybe they can add some value.
Right, sir. So, Tushar sir, one question is like Syngene's manufacturing unit will cater to generic products as well. So, this is Divi's model, not Suvain's. How this will be going forward? Like they are, how, yeah, how this will be a J curve ride when it will also cater to generic molecules.
Uh, so I think it is important to understand one thing here, that the strategies that these companies will follow, right? This is going to evolve over a period of time. They will, like Divi's has gone on record to say that they will not enter biologics. That is something that they have said today. 3 years, 5 years down the line, they may feel the need to do so. Syngene, manufacturing is an important element, but if you have a large facility and if you are getting a good generics product also, where your margins are protected, there's no reason why you can't pick up a CMO activity, for in a generic side. So I would not necessarily say that just because they will get into generics manufacturing, the business can't do well. In fact, you are essentially saying it will be a complement of maybe a very high margin development activity compared to in complement to that a very high revenue growth trajectory from the manufacturing side. So I don't necessarily think it's a bad thing that they are getting it right. Having said that, there are people who track Syngene much better than I. They may be able to throw more, light on this specific point. Aditya, Salil, you track both. In fact, Rahul also
Yeah, I mean, I
tracks
can
them much
I can chime in with my 2 cents here. So we gave two examples early on in the session. One was a chemical company generating 30-35% ROC, and the Granules. If you look at the actual gross block that is dedicated to metformin and paracetamol, which उससे ज़्यादा generic or commodity क्या होगा? वहाँ they are getting 35% ROC. So again, it's all about the operating leverage. Same plant operator, everything is same. Every little helps. It adds to your operating leverage, and there is enough evidence and data to support that even in generic manufacturing, if you are doing it the right way, you can get a very high ROC and very high margins.
Right, sir. So, Aditya sir, one Siddhi Lingesh has asked why CFO over EBITDA is low in all API companies this year.
Yeah. No, that's a prudent question, but there is a very simple reason behind it. So all the KSM prices over the last, I would say, 12 to 18 months have been extremely volatile. And these API companies, KSM is key starting materials. For those who don't know, basically, a majority of India API companies' key starting materials come from China. And we know what China has been going through over the past 12 to 18 months. So the KSM, which come from China, because of various reasons, have been either in short supply or the prices have gone up multifold in certain cases. Some of it is also linked to crude prices because these are essentially solvents. Um, so what these API companies have basically done is they have stocked themselves with the KSMs in the fear that if there is a short supply, then they might not be able to make their end product. Also, if KSM prices further flare up, then they will be protected from that flare up of KSM prices, and they will have stock to manufacture, and they will not have to buy more expensive stock, from the Chinese suppliers. Having said that, it's very, very interesting. What is happening in the marketplace is laughable, but such is the world of business, right? So these API companies, most of them stocked up most on the KSM when the KSM prices were at the peak, and they have that inventory, high price inventory today in their books, right? And the spot KSM prices are actually 20, 30, 10, 15% lower than what they were, let's say 3 months back or 2 months back. So now they have the ability to buy the lower priced KSMs, but it's always FIFO inventory में ना ये लोग majority of these companies follow FIFO method, first in first out. तो अभी क्या हो रहा है ना, इनका 1Q23 का results and even the second quarter results to an extent will have some impact of this FIFO, where their earlier bought high price KSM will be consumed first. And then the lower price KSM will get consumed and get reflected in the P&L and cash flow. So yeah, I mean, that is why the CFO EBITDA has come down, because your working capital is meaningfully expanded, and that working capital is expanding because of the inventory being the big culprit there. But that's a good practice. That's a sound practice. I mean, it's just sheer out of luck that they ended up buying the most quantity at the peak levels. The prices might as well have doubled even from there. We don't know what could have happened. It's just, hindsight is 2020. So इसीलिए CFO EBITDA कम था, but it is therefore we never look at CFO EBITDA from 1 year standpoint. I never ever do that. I know a few people follow me, and thanks a lot for your trust and your admiration. But when I say some things, people take it in isolation here. So we look at CFO EBITDA from a 5-year, 10-year average standpoint. So API companies this year, as in FY22, CFO EBITDA might have been whatever 50, 60. 55% versus the average of 70, 80, 90%. My guess is over the next 2 years, it will be closer to 90%. So the 3-year average will still be 80, 85%, which is the long-term average. So never ever look at these ratios on a single year standpoint basis.
Thank you, sir. So next question is for Rahul, sir. Like person is asking about your view on companies who are into medical instrument and medical products.
So very few listed companies as of now. A few of them were waiting in the IPO pipeline, but a lot of regulatory impact was seen in terms of the some of the medical devices. For example, some of the hospitals took a hit. If I'm not wrong, it was HCG, I believe. Aditya might correct me because of the price cap on the knee replacement side. And I believe a big larger policy is in the anvil where a lot of these medical devices will come under the purview now. So after the stents and knee replacement, I believe some other few medical devices and surgeries could come under the cap. As of now, not many listed players there. So there's not much to speak on that.
Right, sir. So Sajal, sir, yeah, sorry.
Sorry, I think knee replacement के कारण Shelby को impact आया था. They are the
Right.
they are the arthritis specialists. HCG को impact आया था, but that was because of the cap at the oncology drugs margin within hospitals. जो
Right.
drug margins पे cap आया था, उसका impact था.
Right.
And Just to add, Shalby has now gone ahead and acquired another entity in US. They are now also dealing with the kneecap, the product itself. So they have moved on. So in addition to hospital, they've added this business segment in the last 1.5 years, and it's a very interesting potential from a 3 years, 5 years out perspective.
Right. So, Sajal sir, I saw one of your tweet, 2019 tweet, to be off patent small molecule pool has few last remaining blockbusters. Few next generation NCs are restricted to low volumes. Hypo, CNS, neurology, and orphan molecules, as big pharma were never interested in them. So, do you see any change in this? Big pharmas are involved in it, or they are? I mean, the trend is keeping the same. I mean,
No, no. So this is great question, and thanks for pulling that old tweet out. Um, so that was correct back then because majority of the innovation was coming in the disruptive orphan rare diseases and type medicines, which are damn expensive, right? So the COVID, I think, has impacted many businesses negatively in the short run, but COVID is very positively impacting the entire healthcare ecosystem in a big way. And वो कहते हैं ना हाथ कंगन को आरसी क्या if you look at the CNS space, none of the big players were interested in doing any sort of R&D blockbuster research, NC and B research in CNS because it used to be not today, it used to be an old age disease and the cash flow runway was very short. 60-70 साल के पेशेंट को हुआ 5-10 साल में हो गया जय जय सीताराम. So there was absolutely not enough of runway for the big guys like the Pfizers of the world to get interested in the CNS space. And that's why very few new molecules अभी भी levricitam चल रहा है, अभी भी ये सब चल रहा है, gabapentin और बहुत सारे पुराने molecules, right? सब चलते आ रहे हैं, नया innovation हुआ नहीं था. So what COVID did was a lot of respiratory and CNS related issues have started erupting. And if you um, go through my Alpha Series 25 presentation, the one that I did on 22nd of May, towards the second half of the section, there is a detailed slide on the CNS landscape. And there I covered that Pfizer recently acquired a CNS specialist, a company called Biohaven, and they paid top dollars for that acquisition. And the reason there is a sudden change of heart, in the think tank of the Pfizer's scientific advisory board is simple. The 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 cases of Parkinson's is now getting visible in people as young as in their 20s. And the reason, as I explained in my Alpha series, is simple. The way the bodies were designed, जो ऊपर वाले ने बॉडी बना के दी थी वो इसलिए दी थी कि 8 hours ऑफ मेहनत मशक्कत हार्ड वर्क, 8 hours, 8 hours of family recreation time, friends, family, going out with friends and family, and watching television, that type of thing, and good 7-8 hours of sleep. That's how our brains were manufactured when we were born. What we are doing today, our lifestyle is such that we are always online, we are always on mobile, या तो ट्विटर पे या अपना काम कर रहे हो, whether it's whatever that work is, and we are sweating this asset, which is the most important asset in our entire body, which is our brains, and we are working 15-16 hours flat out, and we are ignoring our health. And this will have very serious repercussions. This already is kind of visible in things like the Alzheimer's cases are now getting observed in people like in their 40s and 50s. So imagine the cash flow, imagine the shift in the cash flow. What used to be a 10-year cash flow business is now 40-year cash flow business, arguably. And that's the reason Pfizer is paying top dollars, because now they are interested in this space. And a lot of research. So I I asked this question with one of my investee company about around the COVID time, and they confirmed that yes, there is intensity in sort of phase 1, phase 2, phase 3 level. And there is data, if you observe, any good academic university, either here in the UK or in the US, there is serious evidence based research which is kind of suggesting that CNS as a space will explode going forward, and the requirement for the capacities as well as the capabilities will be dramatically different in the CNS as well as respiratory space going forward than they have been historically. And I'm sure Aditya or maybe Rahul would definitely have a better perspective.
Aditya sir?
Yes, Sajal bhai. Like recently, I shared a couple of articles on which were published in terms of the CNS disease and how the increase in the CNS disease has been post COVID, and of course, the study timelines have just been 1 year, 2 year, but 5 years out, definitely this will be a big area.
I concur. Nothing else to add.
Right, sir. Gurmeet sir,
Hi, good evening.
Gurmeet sir, Sat Sri Akal, Pranam, Paye Lage.
Sat Shri Akal, sir. Sat Shri Akal, sir. Copy to all.
Thanks for dropping by. Much
No, sir.
appreciated.
I had to. I just got a little delayed with a client. The meeting got stretched out. I was just joined much earlier.
Sure. So, sir, मेरा तो आपसे वही एक क्वेश्चन था जो मैंने आपको भेजा. If you are willing to share your thought process, what was going through your mind, and I'm assuming that you were invested in that business back then. So if
Yes.
you can explain the whole sort of your own personal journey, because hindsight में तो हम सब चैंपियन है कि हाँ ये हो गया, but
Sure.
live उसको देखना, and
Yeah.
I know another guy, Tushar would concur, they experienced everything live. So I just want you to share, because ये वाला incident ना किसी और company के संग भी हो सकता है. So that experience might help us, psychologically.
Correct. So I'll tell you, sir, थोड़ा सा इसका background देता हूँ. I'll not take much time. So मैं 7 years of my career I was with Reliance Mutual Fund, which is now Nippon. और आपने भी ट्वीट किया था कि कैसे मधु केला को डिवीज में इन्वेस्ट करना था और मुरली डिवी अपॉइंटमेंट नहीं दे रहे थे, तो ही एक्चुअली बुक्ड अ फ्लाइट ticket. He figured out when he's traveling, booked a ticket next to him, and in the course of the journey convinced him to pick up a sizable stake in divi. That story is popular. तो वो सुन के बहुत इंटरेस्ट आया था. आपने शायद उसके बारे में ट्वीट भी किया है. एंड बट मुझे ये बहुत इंटिमिडेटिंग लगता था पूरा सेक्टर, क्योंकि आई वाज फ्रॉम अ कॉमर्स बैकग्राउंड, नॉन टेक्निकल, नॉन केमिकल बैकग्राउंड. तो निपॉन का एक फार्मा फंड था विच नॉट मेनी पीपल नो. उसका एनएवी 300 हो गया था 10 रुपीज़ का. इट वॉज 30x एट द पीक. अभी भी 275 280 का उसका एनएवी है. एंड ये करीबन मैंने इसमें सिर्फ स्टार्ट किया क्योंकि मुझे इतने अच्छे से बिजनेस समझ में नहीं आता था. तो मुझे लगा कि चलो फार्मा को म्यूचुअल फंड रूट से खेलते हैं, बिकॉज ये मुझे हमेशा हेल्थ केयर एक्साइटिंग लगता था एज एन इन्वेस्टर. एंड दैट जर्नी बिकेम वेरी वेरी गुड. सो मैंने फिर धीरे धीरे सीखना शुरू किया. एक तो आई वॉज इन म्यूचुअल फंड, so I had access to Shailesh Rajban, who used to run the pharma fund. Then Madhu Kela, the stories around DVs. Then I became later on थोड़ा conviction बढ़ा तो मैंने DVs खुद लेना शुरू किया 2014-15 में. In a quantity goal format कि थोड़े थोड़े लेता हूँ. And then this 2017 ये USFDA ने import alert दिया कंपनी के. विशाखापट्टनम प्लांट था in AP, if my memory serves me right. और वो करीबन उस टाइम पे आई थिंक एकदम से आई थिंक 20% उस दिन गिरा था कि 18% गिरा था. एंड इट वाज वेरी वेरी अननर्विंग. तब तक मैं अपने काम कर मतलब आई वाज़न्ट विद रिलायंस और सिटी बैंक दैट पॉइंट ऑफ टाइम. एंड 20% स्टॉक गिरा. और ये समबडी लाइक डिवीज गोइंग थ्रू, जिसकी स्टोरीज थी इन टर्म्स ऑफ बीइंग अ मल्टी बैगर. I think what I did that time was, I contacted a lot of people who used to be pharma specialists, and I had till that point of time, studied it also. थोड़ा समझ में आने लग गया था कि जेनरिक एपीआईज में क्या करता है, कस्टम सिंथेसिस में क्या करता है, मार्जिन प्रोफाइल क्या है. And North America used to account for 32% of the revenue for APIs and intermediates for DVs at that point of time. और उस टाइम पे उसका क्वार्टरली सेल 800-900 करोड़ होता था. Today that number is probably 3 times of that in 4-5 years. So मैं थोड़ा financials का बंदा हूँ, तो इससे मुझे financials ज़्यादा याद रहते हैं. And then I started looking at what APIs it make. और उसकी दिविस की एक वेबसाइट का एक अच्छा बात है कि अगर आप जाएंगे तो उसमें एक उनका लिस्ट ऑफ प्रोडक्ट्स ऑप्शन है, जिसमें आप जाएंगे ना तो वो बताएंगे कि कौन से फॉर अ सिंपल इन्वेस्टर की कौन से कमर्शियल प्रोडक्ट्स हैं और कौन से प्रोडक्ट्स अंडर डेवलपमेंट हैं. तो आप उसको देखोगे तो उसमें आपको उनके जो जहाँ पे वो स्ट्रॉन्ग है, जैसे नेप्रोक्सिन है जो एंटी इन्फ्लेमेटरी और एनाल्जेसिक है, वो भी मेंशन्ड है. मोलनुपिराविर मेंशन्ड है और उसमें लिखा हुआ है कि शैल ओनली बी ऑफर टू लाइसेंस होल्डर्स ऑफ एमपीपी एक्सेट्रा. तो थोड़ा बहुत स्टडी किया और देखा कि बिजनेस परफॉर्मेंस यूएसएफडीए अलर्ट इज नॉट समथिंग which will it was unnerving, but seeing its journey, I thought that the best of the companies go through it. And look at today. I mean, from that price of 650, despite today's correction, it is still 6 times at 35-3600. तो unnerving था. But हाँ, एक महीने 2-3 महीने उसको लिया नहीं था उस टाइम पे, because I wanted more clarity to come in. But I was lucky that my conviction paved off. And and my request to everybody else is that since I've been an SIP investor in a pharma portfolio. If it becomes too overwhelming, no, there are very good experts. There is Aditya here, there is Rahul here, and I can see more people. It's sometimes good to take a portfolio approach and give it to a professional, equip yourself, become better, and then again come back and pick up individual scripts. Also, a lot of time we make this debate about this versus that. कि stock लूं कि portfolio करूं. This is not about this versus that. This is about how you fit in. So आज today I run a PMS, I manage a stock portfolio, I have a direct equity investor. But मैं आज भी SIPs करता हूँ इंडेक्स फंड में और कुछ अच्छे फंड्स में, क्योंकि it helps you learn. And our journey is not just to earn, but also to learn along the process. And that is what most people forget, because the day you stop learning is where even your returns will also start decaying. And your way may not be the best way, right? Because there are 100 ways to to reach the journey. So once you get access to experts, and now you are in a digital platform, you have, let's say in this forum, all pharma experts, keep learning. And some things do it yourself, some things I think you should give it to experts. Figure out the right combination. I think journey would be good. Thank you, sir.
So, Arpan Mehta has asked how to play companies like Praj with so many optionalities from 2G, CBG, liquid discharge, and promising renewable resources. So, how much one should allocate in such companies, and how long one should hold it? What's the framework for investing in such companies?
यार वो भाव डबल हो गया बायो वेबिनार के बाद, आपने बेचा नहीं अब तक, कमाल है. चलो खैर, anyway, with that caveat and disclaimer, I mean, see, Praj, Neeraj asked a very good question on the Alpha Series 25 and towards the back end of that Q&A, and I explained, two clear risks that I see that in Praj. I mean, one is, this, it's all government backed story, this all ethanol thing, right? So that is the enabler, and that is also the risk. If there is any sort of withdrawal of that government support, then the whole ethanol story, especially in India, could crumble pretty quickly. So that's always that one risk. And the secondly, I mean, you also need the flex engine to support. I mean, ethanol blend करके engine की गाड़ी बैठा दोगे, गाड़ी का engine तो कौन खरीदेगा? So you need, the engines to support 20% blending. And maybe you should design those engines to support even more, because banda bar गाड़ी थोड़े ना खरीदेगा. It's a big investment for 10 years at the very least. So flex engines, I think, is an absolute must to get anywhere close to that 20% blending, because if that's the way the trend is progressing, then I want my engine to be, fully flexible. I can run it on 100% ethanol or 100% petrol or whatever. So those are the two, big risks in Praj. But again, as I explained in that biotech webinar, that Praj is kind of today is, heavily, the cash flow wise is heavily dependent on that, the ethanol thing. But this is a giant in the industrial biotechnology. But management would have to execute. थाली में परोस के तो कोई देगा नहीं कि अपॉर्चुनिटी है, इंडस्ट्री 5 आ गया है, अब आप क्योंकि प्राज हो तो यू डिजर्व टू बिकम अ लार्ज कैप, ऐसा नहीं होगा. दे वुड हैव टू execute in other areas, things like high purity business, even their critical equipment. So it's a conglomerate. They have got multiple divisions. So there is bioenergy, which is one, but let's keep that aside. In the high purity, then there is critical process equipment, and so on and so forth. So renewable chemicals is a very large opportunity, and ethanol is a building block for many downstream products. And it's all about the technology. The yield and the purity of the end product is a function of technology, and that's what Praj claims to be doing in their matrix lab. तो अगर बाकी नॉन एथेनॉल साइड ऑफ बिजनेस में ट्रैक्शन नहीं दिखा, सो दैट इज अ रेड फ्लैग. तो वो मतलब जो भी आप लोग फंड में होल्ड कर रहे हो, लार्ज पोजीशन है, थोड़ा मैनेजमेंट को जाके अकेले में कोने में हड़काओ कि भाई क्यों नहीं, right? So that's one. And then coming back to the bioenergy, other than ethanol, I mean, CNG is a big, I mean, phased 2G technology, right? It is still in the fledgling state. A lot of pilot plants are being set up. Abhi एक state owned oil company ने भी 2G launch किया है. So there will be lot of learning coming out of that. And there are not many companies in India who have that technology to go into. And मेरे हिसाब से जो एनर्जी सिक्योरिटी का लैंडस्केप है गोइंग फॉरवर्ड, नो सिंगल टेक्नोलॉजी विल बी अ विनर. सी इलेक्ट्रिक व्हीकल भी आएगा तो उसकी पावर जनरेशन, इज इट रियली ग्रीन? वो क्या ग्रीन एनर्जी है, सोलर है, विंड है, हाइड्रो है, जो भी है, इज इट रियली ग्रीन? तो एक वो क्वेश्चन मार्क हमेशा रहेगा मेरे दिमाग में कि इफ यू आर जस्ट गोइंग full steam ahead on the EV, are you just transferring that pollution from cities to rural area? कि भाई कोल बेस्ड पावर प्लांट जो है वो रूरल इंडिया में चल रहा है, ईवी चल रही है शहर में, पोल्यूशन हो रहा है गांव में. I mean, I recently shared one of the pictures on my Twitter. I mean, that's how the world is looking like from a pollution perspective. And India and China are top 2, and US is a close third. Maybe US is number 2 and India is close third today. And Africa and parts of Europe and Russia are relatively clean. So I mean, सारे ही मरोगे फिर तो. If biotechnology is not embraced, तो कोई बचेगा नहीं. फिर क्या करोगे पोर्टफोलियो का? So the opportunity runway is large, but what I need to see is the execution, which to my mind today is not as visible in non-ethanol areas in Praj. And maybe because it's the nature of the business, अगर इतना easy होता तो आज 10 Praj होते ना इंडिया में, एक ही क्यों है? Maybe some other views. I mean, a lot of people are tracking Praj, I know.
One point I think, sir, just if I can just pitch in here with your permission, is that you rightly pointed out that it's obviously a play on bioenergy, and अभी उसका जो order book भी आप देखोगे, 66% is the traction is from grain based distillery, which is basically your starch related feedstock, right? And then compressed biogas है, purity business है. So India में the model could be very different than the rest of the world. And so I have a lot of clients who are in energy business, so they recommend having a portfolio approach, where you play hydrogen, you play solar, you play EV charging. So play the energy mix rather than just being, because we don't know what will come. while we are only at 10% blending and government is committed to getting to E20 and there is, near-term visibility also, but it's good to play it through, various, and there is a lot of money which is coming. See, the energy need is only going to go up. It is only the mix of the energy which will change. So this is one sector which is seeing the highest capex, across, and the highest investments happening, people creating new subsidiaries, which is basically for the renewable business. हमने देखा कि Adani Power did very well. We saw Tata Power then getting investments in its renewable business. Suppose Chandra coming in Tata Sons. They have again a very clear target from FY23 to FY27. $1 ट्रिलियन का कैपेक्स बोला है उन्होंने अगले 4 साल में सिर्फ ग्रीन बिजनेस पे होगा. You have seen Reliance, so they are trying to do to energy what they did to Jio. So Monday there is an AGM. Last AGM they announced 75,000 crores capex in the energy business across, and 4 gigafactories. They have acquired 11 companies there. Then you have bit of hydrogen play where some other players are getting strong. So I think good to play the energy mix in my view, rather than just being concentrated on one. Despite having you may increase the weightage here and there in terms of basis of conviction and probably domain of expertise, but good to play the energy mix rather than just bet on one stock.
Right, sir. Sir, one question from Arpan is like how to identify headwinds in CDMO APIs. How should we allocate more in bad times if we get USFDA? USFDA being the biggest risk, how long does it take for them to re-inspect if there is an infraction? For example, Indoco, if they get one again, would you sell or accumulate more? So USFDA inspection can delay revenues, but does that create a window to acquire more?
See, good question. Couple of points here. In my view, cost of compliance for any company will always, I repeat, will always be lower than the cost of remediation. So you better invest in compliance. क्योंकि थप्पड़ पड़ा तो मशीन बंद हो जाएगी. Work hard. Right? सब डिवीज का एग्जांपल लेते हैं क्योंकि वो हाइंडसाइड है, सबको पता है कि 1 साल में गाड़ी चढ़ निकली. Is that the default? I mean, आरती ड्रग्स को 2015 में USFDA मिला था, आज तक क्लियर नहीं हुआ. इपका रतलाम या कहीं इनका एमपी में जो प्लांट है, कहाँ क्लियर हुआ? तो Divi's is not the poster boy as far as this incident is concerned. It's more of an exception. इंडोको को भी बड़ी मेहनत मशक्कत करनी पड़ी, पसीने छूट गए थे, तब जाके बाहर निकले. And especially this is true for sterile injectable manufacturing and even more for the biosimilar biologics. Oral solid बनाना आता है इंडियंस को, वहां the risk is relatively low. So again, you have to follow the framework and understand what this business is all about. And again, as if you remember, Tushar bhai suggested that अगर तुम्हारा रोज ही एग्जाम हो रहा है, you are always in preparation mode. So if you are custom synthesis player, तुमको कोई ना कोई कस्टमर जो है वो रोज ऑडिट कर रहा है. And this is the definition of specialty. जब डिवीज स्पेशलिटी क्यों था, कि डिवीज का जब रिएक्टर बंद हुआ तो बहुतों की सांसें बंद हो गई. अगर कमोडिटी होती तो स्विच कर लेते कि चलो डिवीज नहीं जो है हम किसी और से ले लेते हैं. They couldn't do that because डिवीज is the real specialty chemicals. कि सारे आ गए हवाई जहाज पकड़ के, कुर्सी डाल के वहीं बैठ गए कि भाई क्यों हो गया, क्या हो गया. And this is the reason, there is frequent customer audits in these companies, whether it's Neuland or anyone. So they are always in a state of readiness, alert रहते हैं. Whereas if you are competing, then you are on your own. तुम्हारी API है, तुम्हारा अंडा, तुम जानो तुम्हारा काम. There is no audit. And they cut corners in compliance. And that's why I always say the cost of compliance is way lower than the cost of remediation. अभी हो रहा है ना वो खाड़ का remediation और बाकी सन, हलोल, पंजाब वाला plant, Lupin, Aurobindo. I mean, you name it and they're all there. So you have to be very careful.
Right, sir. Sir, we take one question from Sahir, if you allow, and then the questions in comments which we find are answerable, we'll be taking rapid fire for those questions. Rest we have covered.
Sure.
Yeah, Sahir.
Hi, Sajal thank you, Prince. So my question was about fermentation-based APIs. So why are they gaining traction? And could you give a bit list of like advantages of fermentation-based APIs as well as disadvantages, for example, power costs, etc. And with respect to Krebs Bio, could you speak about their product basket a little bit, if possible?
No, sorry, a very, very relevant question. So before I answer this directly, let me tell you a short story. So if if I'm really thirsty and if I'm out and about in a marketplace, और मैं घर से पानी की बोतल जो 20 रुपए वाली है वो मैं ले जाना भूल गया, and I'm really desperate for पोर्टेबल वाटर, और वो मुझे 30 रुपए की बोतल वहां मिलेगी, मैं लूंगा कि नहीं लूंगा? राइट? 40 की भी मिलेगी तो मैं लूंगा if I am desperate. So if you need supply security, you need it. वहां आप भाव नहीं देखोगे, तुम्हारी सांस रुक जाएगी तो तुम क्या करोगे सस्ता लेके? So that is one point. China today is 100%. It's a big risk. चाइना की प्लांट बंद हो सकता है, could be whatever reason, right? It's an erratic country. No credible innovator or generic player will take that. कॉस्ट पे बात ही नहीं होगी. 20% लोगे, 30% लोगे तो लोगे. That again, वही example. If you are desperate for something, you don't haggle on price. So that's one. Yes, it's a power hungry business. Fermentation, steam generation, वो सब में काफी सारा पावर कंज्यूम होता है. बट देयर आर, सी इफ यू सी सिंजीन का ये पावर कंपनीज ले रहे हैं ना, ग्रीन पावर में जा रहे हैं, रिन्यूएबल पावर में. क्यों जा रहे हैं? There are two reasons. A, they want that power security, and B, their customers, they want to be doing business with companies like Syngene who have that sort of ethical mindset कि planet को pollute नहीं करना, already बहुत polluted planet है. But the show must go on, the lights must be on in a as green a manner as possible. Industry 5.0 में बार बार बोल रहा हूँ, ये नॉन निगोशिएबल है, इरिवर्सिबल प्रोसेस है. पसंद हो या नहीं हो, ये करना ही पड़ेगा. So that is one. So there will be some percentage of work that will initially shift, and India was always dominant. ये तो because of जो formulators हैं. अभी क्या होता है ना, 500 formulator हैं, they are jostling, कुछ branded हैं, कुछ unbranded हैं, and they are selling their own sort of same under API. The real component is the API in those 500 formulations. And how many players are making those APIs? That's where the buying power, you have to look at the entire supply chain. Which component has got more muscle power? If 5 players are making the API that is going into 5 different formulators, who has got the power to bargain? Is the API player. So, I mean, in the emerging landscape, fermentation as a space will pick up. Either या तो solar डालेंगे ये लोग या wind करेंगे, they will manage whatever. And even the customers, as I said, वो water वाला example, 30 रुपए का भी लेंगे, 40 का भी लेंगे. If they need it, they need it. They may not buy 100% at that price, but they will definitely start buying it. And I don't want to be very specific on Crest, but if you look at my API webinar, right, last year का, उसमें मैंने कई सारे examples including Krebs cover किया है. Yesterday I tweeted something on advanced enzymes, right? So serratiopeptidase, right? So Krebs has got that molecule. अगर ये scale up कर ले गए तो it could be a game changer for the business. But किसको पता होगा कि नहीं होगा? जब होगा तब ले लेंगे, जब दिखेगा नंबर्स में. उसके लिए यार 5% लेके वो लॉस मेकिंग बिजनेस जो हो सकता है अगले 50 साल टर्न अराउंड ना करे, दैट इज नॉट द राइट अप्रोच. The right approach is to track that business, and when you see operating performance turning around, then you should be shifting gears.
Right, sir. So we take few questions from the comments. One second, give me a moment.
हाँ, rapid fire कर लेते हैं. I don't want anyone to go empty handed because I promised that.
Right, sir. So one question is on Granules. Like they are saying why they are going for buyback when they have debt and capex, ongoing capex of 1000 K. So
नहीं कुछ नहीं है. I think it's more of a signaling move more than anything. And what क्या किस बात की debt की बात कर रहे हो यार? Their net debt is equal to 1 times of operating cash of this year. I mean, again, Tushar, like, you track this business better, but in my view, the balance sheet today is fine.
Okay, sir. One question is: does IOL CP have a similar moat with ibuprofen?
So I say, repeat that question again, please.
Does IOL CP have a similar moat with ibuprofen?
हाँ, तो currently IOL backward integrated है ना IBU में. So definitely advantage है, as long as this KSM level जो है ना pain चल रहा है. But again, तुमको ये भी देखना है ना कि how much percentage is coming from a single molecule, whether the capacities are fungible or dedicated. Dedicated facility में risk ज़्यादा होता है.
Right, sir. And what do you feel about Sequent's turkey business in next couple of years?
Is the dog wagging the tail more than anything. It's a small business. वो currency translation का issue है, but it's a sterile unit. It's a large market, and I think it's a kind of a gateway for them to enter into Europe. So if I see any weakness in the stock around the 85-90 levels, I mean, I think it's an absolute no-brainer. But again, I could be wrong. So take that as a caveat with a plenty of grain of salt.
All right. So many questions on Supriya Life Sciences. Any speaker want to take outlook? Basically.
We are invested in India. Can you hear me? Some echo coming back. Hello.
Yeah, Tushar, go ahead.
Yeah. Okay. No, so we are invested in Supriya with that as a caveat. And again, a disclaimer that this is just for education purpose. See, look at the business. It's a fully backward integrated business. It's a high gross margin business. They are doing few products today. People have that question that whether the margins are sustainable, and whether they are too concentrated. But I think the pipeline is very, very strong. They are working on a number of new opportunities in the existing products. If you actually go deep into understanding the reason for that moat, for that high gross margin, you can very well explain the reason for jump in margin profile in the last 3 years. So I would say that the margin profile is very much sustainable at current or around current levels. I think they are diversifying into several new molecules. It's a fully backward integrated business. They are able to handle a number of complex chemistries at scale. It is not easy to get narcotics approval, and much lesser easy to manufacture narcotics products at scale, which they have been doing very, very well. So very few people are aware that actually in narcotics, you need to get approvals batch by batch, and it's a fully recorded, it's a CCTV recorded manufacturing operation. So it's not something that a lot of companies are willing to or comfortable doing. It's not something that from a bureaucratic and documentation basis, it's very easy to do. They have managed to do this, with their leading molecule ketamine. They are getting very, very good traction. And again, ketamine is seeing an expansion of uses, multiple new trials using that drug. It is being repurposed or looked at for a number of new indications. So I think that they should continue to enjoy very good strength and very good growth in the leading existing molecules. The new pipeline is good. Plus, also look at a few other things that should give you comfort. The promoter stake is very high. The promoters have taken a significant money in OFS and at the IPO stage. So, despite that, they continue to retain a very high value, residual stake in the company. It's a debt-free company. The promoters are debt-free, no pledge. There's no subsidiary structure. There is the working capital is at par or better than most of their peers in the similar space. So, by all means, it looks a very, very high quality business to own. Fully backward integrated. They have very good strength and market leadership globally in their key molecules. Balance sheet looks good. Promoter is focused, and the next generation is in the business. and they have a professional CEO as well. The management looks very, very, very good. So I may be biased because of my holding, but I think it's a very good company to track and monitor closely over the next few years. And I would say that their margin profile is sustainable. Don't look at this company quarter to quarter. There's a very clear seasonality in this business. You have to understand the reason for that seasonality, but you have to also look at this business YOY and an overall perspective. What kind of growth they've managed over the last 5 years. If they can manage this kind of growth over the next five, this could be a 1,500, 2,000 crore company revenue wise. At 40% margin, maybe you take the 27, 28%, 30% profit margin company, and it's available at I think 11, 12 times next year earnings. So you decide what the value should be to such a kind of business.
Thanks, Tushar. So Vivek, you can quickly unmute and ask a question.
Hey, hi Prince. Thanks for the opportunity. So, Sajal sir, I've been following you since long, and I really admire the kind of work which you have been doing, sharing the information like no other person is doing over Twitter. It's more from educational perspective. So, I have a couple of statements to make here. One is I see people trolling you over Sequent, Neuland because of the underperformance which has been doing from past year and a half or so. I think there's nothing to blame Sajal in overall capacity because he's sharing just the information and whatever business he's liking. I don't get why people just go gung ho over the tweets which he do and without doing any due diligence they invest. If the stock performs, they really admire him. If the stock underperforms, they have a lot to complain. And I see some big analysts also doing the same, which is like I'm not understanding why they're doing it. Okay. So my question now, to be precise, is I see like the businesses which are underperforming, they are not doing good. What keeps you motivated to be invested in them for a longer period? How you be patient about the investments which you're doing? Because probably during that time you may have missed a couple of other opportunities which might grow over the same period in a different exponential form. So, like most of the pharma, which is being underdoing for quite some time now. So, the manufacturing space, it's be like booming in India. So, what keeps you motivated to be invested in some loss-making businesses also with the big time horizon which you're having? Or and what like why you're not investing in the other available opportunities just because that is only the area of expertise which you understand? Is that the only reason? Thank you.
Yeah, thanks, Vivek. Very, very thoughtful question, I would say. So, with all humility and honesty, I think there is a USFDA Form 483 in every sector, from financial services to IT. It's just that we don't know what the risk factor is in a specific business. We kind of assume that pharma is the only business, like Gurmeet said. He was very afraid of pharma at one point in time. But I repeat, there is a significant black swan just waiting to happen in any business. I mean, we have seen such events happening in financial services. I have seen the large cap companies of their times, the global tellies and the silver line and the pentamedias, just bite the dust and go zero. So the, so you have to operate in a space where if you make the mistake, at least you know why you made the mistake and you can learn and improve. And pharma or healthcare as a whole, if I talk about, there are at least 10, 15 different sectors, and there is no correlation. So today, RPG Life Sciences, again caveat, it's not just for the discussion. RPG Life Sciences का share price और Lupin के share price में correlation होना चाहिए था ना, because they are in the same sector. And I know Aditya has got investments in both in his funds. He recently disclosed that, so maybe he can add more. But in my view, there is absolutely no correlation. Every story is so different that even if I buy 20 healthcare companies, I will be completely diversified, because it's a very large, from biologics to CDMOs to hospitals to branded generics, to APIs, complex APIs, even diagnostics if the valuations are right. So again, it depends on what you understand better, and there is also an element of self awareness. You have to know what you can sleep with. I cannot sleep with a 10% holding in a financial services. I cannot. तो मेरे को वही पीरामल लेने में वही डर लगता है कि अभी 1-2 महीने में कुछ ऐसा ना हो जाए कि मतलब मुझे लग रहा है कि 1600-1700 पे सस्ता है और वो स्टॉक ही आधा हो गया। DHFL का टाइम बॉम्ब तो है ना उस बिजनेस में अभी भी। आई डोंट नो व्हाट विल हैपन, नो वन नोज। इट्स ऑल हाइंडसाइट। हम हाइंडसाइट में सारे लोग चैंपियन है, बट यू डोंट मेक मनी फ्रॉम हाइंडसाइट, यू मेक मनी फ्रॉम फोरसाइट, यू ट्वीट इन हाइंडसाइट।
सो जैसे आपने मैक्स इंडिया का एग्जांपल लिया,
हाँ,
I have been tracking that stock since a long time. Okay, so I don't see that stock moving at all because probably that's a loss-making business. I
हाँ,
see that down the line it can prove to be big. That's an asset-light model and all. But what keeps you motivated to be invested for such a long period? Probably the amount of money which you'll be putting in that business, that will be
हाँ,
very
so I
minuscule.
don't allocate ना, so जितने भी loss making, so even Max, this is a very recent holding, so I was not invested in the pre-demerger, right? So this is literally 2-3 months back, and very good friend of mine, I don't want to name that person for whatever reason, he kindly introduced this story to me, and my initial reaction was, यार ये तो real estate का business है, I'm not interested. And then after few months, I bumped into the same person again, and we discussed the same, and then I understood कि यार ये तो this is also care, इसमें services वाला business भी है, the assisted services, what they call the care homes वाला, where the break even is a lot faster than a hospital business, and the capex requirement is also low, the opex is also low, and प्री-ऑपरेटिव एंड पोस्ट ऑपरेटिव में ये तो चल रही है। आप मेडिकल टूरिज्म को सोचते हो, लोग कहाँ रहेंगे? या सारे के सारे हॉस्पिटल्स जो हैं वो मेट्रोज में कॉन्सेंट्रेटेड हैं। तुम्हारी कंट्री की पॉपुलेशन तो नॉन मेट्रो है, तो people travel a lot for healthcare reasons. So these care homes, pre-operative and post-operative, they have got a very relevant role to play. So you don't allocate, as much as you would in a company like, let's say Syngene, because वो already show कर चुका है execution. Where the execution is loud and clear, you allocate more. So allocation has to be a function of, where the business is today, and more importantly, where it can be 3 to 5 years out. And a loss-making business, for tracking, you can have a zero holding and you can still track it very carefully. But you don't have to allocate. I completely understand this opportunity, because मैं क्यों लेके बैठ जाऊंगा यार, क्योंकि मुझे नहीं पता टर्न अराउंड होगा भी कि नहीं होगा. What if 5 साल नहीं हुआ?
तो आप एक्चुअली जब नंबर्स आने शुरू होते हैं तब आप एलोकेशन बढ़ाते हो?
हाँ, परफॉर्मेंस जब आएगी, then I get more confidence कि management is actually walking the talk. So Neuland वाला एग्जांपल दिया ना मैंने, why I am increasing the allocation today. Again disclaimer कि मैं एग्जीक्यूशन देख रहा हूँ ना, 23% का केगर दिखा तो रहे हैं इनोवेटर में, वही बोला है कि वही करना है, 60% ग्रॉस मार्जिन का बिजनेस है, तो जो बोला है वही तो कर रहे हैं. तो आई सी दैट. अब भाव नीचे आ गया तो भाव भगवान छे. अभी तो कोविड के टाइम पे भाव भगवान दोनों मृत्यु लोक पे आ गए थे, तो कोई ले नहीं रहा था.
सही है.
Thanks,
Can I add?
Yeah, sure.
So on the point on how do you add a loss-making business, I think we have historically discussed one case study here, which is Healthcare Global. It was a loss-making business for a very long time. What I would focus all the participants to do is to not focus on the PAT. I can show you any kind of PAT in my company. Focus on cash flows. And that too, you have to verify that the cash flow is real, and there are ratios and ways of doing that. But to my understanding, Max India has positive cash flow. They're a net cash positive company. They have not diluted equity ever, and they're cash flow positive. So PAT loss hai kya? Yes. Are they burning cash? No. They are making cash every month, every quarter. So आपका premise मतलब मैं question कर रहा हूँ. So sorry about that, but PAT loss is nothing. That's just a number on the book. Similarly, a 40% EBITDA margin is nothing. It's a number on the book if it's not backed by cash flow, right?
Yeah, that's true. Thanks,
Yeah.
Aditya.
So आप दोबारा
Thanks.
study कर लेना. I think it's
बिल्कुल.
a cash flow positive business.
Sure, Aditya. Thanks, Sajal. Thanks, Aditya.
Thanks, Vivek. So next question is, one second. Yeah. Yeah, Aditya sir, Natco will have net profit of 1,000 crore each year for next 4 years. Why market is not giving fair discount to Netco, and what's your opinion on this?
यार ये वही old song है, unfortunately. Natco's majority, again, we hold it in some of our funds managed by my different fund managers, not in my funds. But my view on Natco has been simply that if your majority of profit comes from two products, one is this case is Copaxone and the next would be Revlimid, put together, it's a highly concentrated profit pool in two products. Now, those profit pools are just waiting to be disrupted, right? So we know the names of players who are going to come into Copaxone. So Biocon, Dr. Reddy's, they're all awaiting approval. Aurobindo, they're all awaiting approval for their Copaxone generic. As and when those approval comes, अब वो approval कब आएगा वो किसी को नहीं मालूम. It can come in 2 days, come in 2 years, may not come in 20 years. I mean, God knows how the USFDA and when the USFDA will approve, but that's the risk. So see, basically, why is Coal India at 5 times P multiple, right? There is a terminal risk to the thermal power story. People don't want to use thermal power. We want a cleaner, greener earth, right? So which is why Coal India is at the multiple that it trades. Now the same goes for Natco. There is a terminal risk to his cash flows. The cash flows that you are buying today are not going to be secularly, terminally growing. These will fade to competition. These will fade to eventual, commoditization. So that will happen to Revlimid also 4 years, 5 years out. It can happen to Copaxone anytime. It can happen to Copaxone next day. It can happen to Copaxone in the next decade. We don't know. So wherever the cash flows has terminal risk, those stocks don't get multiples. That is the point here. So be it a Coal India, be it an Atco, it is going to be the same story everywhere. Because in a DCF, and that is the only way to value any asset, in a DCF, if you see 60-70% of your intrinsic value of any stock would largely be the terminal value. And if your terminal value are uncertain about because you don't know the 2 decade or the 1 decade outlook on the category of the business that the company does, then you have no business in being in that stock because it will never get the multiple. Okay, so that is how basically I see it. I may be wrong and others may like to add.
Right, sir. So, Rahul sir, one question is, a person is asking views on ME Organic and Lincoln Pharma, if you would like to take. Rahul?
I'm sorry, I've not done detailed work on these two companies, so I would refrain from commenting.
Any other speaker would like to, or shall we give it a pass? Okay. Maximum comments are stock names, sir. People are asking views on SMS Pharma, Venus Remedies, so on and so forth. Okay, there is, sir, one question is like, what is the view on animal pharma in India? What to see in those businesses?
I mean, I see massive runway ahead, and Aditya, please do add as you understand this space as well. So, I mean, if you look at what COVID has done, there's a lot of need for companionship at all age levels, not just Gen Z, right? And I think this Western world type model is also visible in India. We see more pet parents and pet lovers, and this will snowball over a period of time because there are therapeutic reasons for owning these pets and becoming their pet parents, and you love them as much as you love their own children. You give them the best food, you
No, no, no,
take
no, no,
care
no.
of them.
Sajal bhai, I disagree. You love them more. I was just studying a psychological study. No, no, I was studying a psychological research piece on this. So the reason why, so they interviewed or they basically researched on a number of couples who own pets as well as have children, and they asked them few questions around how they take care of them and all that. uh, and the crux of the study was that because the owner knows that the pet's lifespan can be anywhere between 4 to 10 years or 15 years, whereas the child's lifespan will probably be beyond the owner's lifespan. The love for the pet is somehow more intense than it is for the child. And then I went out to see if I could track a data point to ensure or to corroborate this. So a deworming product for a cat is 2000 rupee odd tablet. A deworming product for a child is about 100 rupee a tablet. A deworming for us as adults is like 10 rupees a tablet. So I think crude way of putting it, but I sorry I interrupted you, but this was a very interesting piece I read. I would share it on Twitter if I can still find it on my mobile. But it is a very interesting piece I read.
No, no,
Go ahead, Sajal bhai.
that's a great data. Thanks for sharing that, Aditya. And I mean, for the first time in the history, we are seeing biologics coming out of our animal health. So market होगा बिक रहा है. ऐसा भी नहीं है कि आ गया और सेल नहीं हो रही है. I mean, Librela, as an example, pain management is a big issue in animals. अभी वो बेचारा जानवर कुछ बोल नहीं सकता है. But there are now diagnostics available that can diagnose the root cause. Previously ये सब नहीं था. So IDEX is one company. If you track that in the US, I mean diagnostics. Even Zoetis is going big into diagnostics space. So again, they're all If you do the right diagnosis, you do the right prognosis, and then you the treatment and so on. I mean, Zoetis is saying Librela 1 billion का blockbuster हो गया यार. Animal में कौन सा product 1 billion का है? And more biologics. So Elanco has acquired a biologics company as well. So biologics will be big even in animals. So I mean that tells you something, and people are willing to pay for top dollars to extend the life of their animals, or make their lives a bit better, and they don't hesitate in paying because वो family members हैं. So that is
So
the
that's
reason
the
I'm so much I'm a big fan of animal healthcare, and I've got spread across. I mean, I've got at least 4 or 5 direct, indirect. I mean, some companies are not pure play animals. So Syngene as an example, I mean they also are scaling up in the animal business, but as a basket, I mean, I've got exposure across. Sorry.
Yeah. Tushar sir, any view on Aarti Industries demerger? You there, Tushar? Okay, sir, we are also getting many questions on Hikal. Actually, we discussed at length in last spaces, but for those who couldn't listen, or maybe some 2 cents on that, Aditya sir, Sajal sir.
Yeah, Hikal में I think so again disclaimer, we own it, we have personal and professional interest in it, so please take it with a pinch of salt, and this is purely for education purposes. Hikal, I think the industrial accident that happened with them was actually an opportunity for investors to jump into the stock at a more reasonable price. From a business model standpoint, there was absolutely no doubt in my head, pre the accident and post the accident. I think the top-down view there is huge scope for scaling up. And no matter who you talk to in the API industry, few companies get a lot of respect. Hikal, DVs, Neuland. I mean, these are companies that get a lot of respect from their competitors. When you speak to the competitors about these companies, you see the respect. Uh, and that gives you all the more confidence that these business models have absolutely a very long runway to sort of grow. Specific to Hikal, I would say the pesticide business actually is far more valuable business than their pharma business. But their pharma business is making some very, very, very strong, radical changes in terms of pipeline, in terms of contracts, in terms of going out after the CDMO piece, where I feel even the pharma piece can really create a lot of value. But the pesticide business, or the so-called crop protection business, is actually the business which is the absolute crown jewel of the company.
Right, thank you. So, Sandeep, one question is like on the compliance side. So they're asking how you see Indian companies, I mean, working on the compliance, how they have improved over a period of decade or so.
See, I think Sajal bhai earlier spoke about compliance. पहले से करो तो ठीक है is I think the best lesson. Now coming to generally how Indian companies are improving, I think unfortunately what happens is that compliance related problems become a spiral of their own. And Sajal bhai gave very good examples that rather than looking at one disease, which is the rare exception, we should be looking at how many companies have not been able to come out for years and years from a 483 mess. Then what does that indicate? It does not indicate that it is for example, one, it indicates that it is a difficult problem to solve. Second, it also indicates that it is a spiral which takes years and years and years to come out of. For example, you look at lupin, it has taken years and it is still not coming out. So Jalbai gave a lot of other examples. uh, I, for whatever reason, in the country we live in the culture we live in, somehow I think that for us as a culture, compliance becomes a problem. I'll give you a simple example. हम लोग वो culture है जो red light पे रुकते नहीं है before the red light turns completely green, और पहले ही गाड़ियां चलाते हैं. So I think that needs to be equated with the compliance issues that we see everywhere, not just in pharma. Let's first also acknowledge that pharma और 483 का compliance का issue आप सबको दिखाई देता है because 483 के बारे में news articles लिखे जाते हैं. But I genuinely think that our culture's issues related to compliance are more deeper, and probably it will take maybe another 1-2 generations, by which time will become a more compliant society respecting rules across sectors. Let's not look at only from the pharma lens. I know this is not the direct answer, but I don't want to take names any further beyond this and use only some examples.
नहीं, राइट संदीप. आई मीन नंदा सेरी में बहुत बड़ा धमाका हुआ था अभी रिसेंटली, सबको याद है, केमिकल कंपनी में.
How many chemical company related accidents get reported in the media? That
Correct,
also is
correct.
I come from Hyderabad after 12 years of staying there. I can tell you, आप लोग जो हैदराबाद में नहीं रहते हो, आपको पता भी नहीं चलता है कितने ये जो छोटे छोटे यूनिट्स है वहां पे कितने ब्लास्ट होते हैं, लोग मरते नहीं मरते, एक्सीडेंट्स होते हैं. Let's look at it this way. See, we here are a pharma investor cohort today, 1400-1500 of us, but we belong to 140 करोड़ की आबादी जहां पे culture of compliance is a complication. हम दीवारों पे थूकते हैं, हम हमारे एंशिएंट साइट्स पे नाम लिखते हैं और सिग्नल पे काट के भागते हैं. सो compliance is a problem across for us. Let's not restrict to pharma and only company names.
नहीं, एब्सोल्युटली. ये जो जुगाड़ का कल्चर है ना, ये तो हमारे डीएनए में आ चुका है, और इसमें हो सकता है 100 साल लग जाए निकलने में.
That's why I said no, maybe 1-2 generations. मैं उस हिसाब से गिन रहा था.
Correct.
And probably we look at it in a different context. Maybe Sajal bhai, if you give me one more minute, companies
Sure.
which have gone beyond this jugaad culture of compliance from another sector. One reason why I respect the HDFC group of entities is because they have constantly, for the last 25-30 years, ever since I was a student, I have seen that they are a group which has focused on global level, best practices. You've seen other banking companies come and go, NBFCs come and go, हर कोई flavor of the season होता है. HDFC, the main two pillars may not have had great performance on the market price-wise in the last 14-18 months. But I think as a group, the kind of DNA integration that happens on not doing the wrong thing at HDFC is a very fantastic example to follow.
Thanks, Sandeep. Okay. Aditya sir or Tushar sir, anyone of you can take. Why not Indian companies do R&D to discover NC? Why we always look towards MNC for innovation?
Sandeep didn't realize he was unmute.
No, I specifically unmuted myself to laugh at that question. Aditya, I'm taking this on my chest and my shoulders कि मैं जानबूझ के unmute करके हंसा हूँ.
No, so I get it. See, it is again related to culture, and पता नहीं, for the risk of sounding a bit historian and a bit philosophical, Indians were innovators 6 centuries back. हमने बहुत कुछ इन्वेंट किया पूरी दुनिया के लिए, including the number zero, right? So I mean, I don't want to be too patriotic, but end of the day, what you'll realize if you study Indian history, 6 centuries back, we were the innovators. The whole world used to look at us for innovations, and not only in pharma, across fields and everything. Then things changed. Now we got colonialized. So basically, Britishers came and ruled, Mughals came and ruled, and वो क्या है, वो centuries of gulami taught us to toe the line rather than thinking differently. And rather than thinking as a collective society, to think individually. कई एक चीजें तोड़ दी उन्होंने हमारे cultural DNA में, and वो repair करने में उतना ही time जाएगा. So but having said that, now coming to the specifics of the industry, there are companies that invest in innovation. There are companies which have been investing in innovation. I know personally for more than 2 decades now. That includes Spark from Sun Pharma's sister concern. That includes Glenmark, Wockhardt, Biocon, Lupin. They all invest in part. Even Torrent Pharma invests in part in new chemical entities and novel delivery systems. But the fact is कि बिकॉज एक तो हमारे कल्चर का पार्ट नहीं है, दूसरा इनोवेशन में आप आरओआई नहीं ढूंढ सकते. सो यू कैनॉट टेल द साइंटिस्ट दैट दिस इज योर बजट एंड यू इनोवेट इन दिस बजट. The scientist will need to do what he will need to do. You have to create budget if you have to go that way for it. But उससे क्या है कि फिर पूरे नंबर हिल जाते हैं, कंपनी के कैश फ्लो हिल जाता है, then the stock prices react and then the entrepreneur gets disturbed. तो ये इतना इजी जर्नी नहीं है. इट्स अ डार्ट ऑफ इन द डार्क, राइट? व्हेन यू आर ट्राइंग टू क्रिएट समथिंग न्यू, यू आर थ्रोइंग अ डार्ट इन द डार्क. वो 100 बार नहीं लगेगा, 101st टाइम पे लग जाएगा, हो सकता है सेकंड ट्राई पे लग जाए, हो सकता है 12th ट्राई पे लग जाए. नोबडी नोज. तो वो क्या है, वो एक एंडेवर है जो ऑनगोइंग है और चलता रहेगा. somebody someday might get lucky and might hit a target. See, the global rate of successful innovation is 3%, 3%. तो आपको 100 मॉलिक्यूल लेने पड़ेंगे on an average to get 3 successes. अभी most of our Indian companies who invest in innovation have been doing innovation for 10, 15, 12, 8 molecules. तो इनको तो anyways by the law of probability अभी तक success नहीं मिलनी चाहिए थी, right? And which is what has happened. Nobody has got a success, right? So yeah, I mean, we are investing, but it will take its own time. Yeah, this is not something which will change over the next 3 or 5 years, which is generally my investment horizon. So therefore, I don't invest in such companies. Over to you, Sandeep.
Yeah, so I think the NC research question needs to be looked at, built upon what Aditya said in our culture and multiple facets. Let's try to break it quickly because I know we have already close to 3.5 hours being on this call. Number one starts with education. Uh, our our educational institutes, unfortunately, at MSc, PhD, or MPharm, PhD levels, do not train sufficient students in the art and science of looking at novel chemical entity research. I've been in the pharma space now for 20 years, and I can tell you our PhD guides in India are not the right material. If you look at it on a numerical basis, the number of PhDs that we have in what I would call as life science space, and then discuss how we get those PhDs. A very large part of our PhD research is copycat research. For people in this podcast, who are listening, we still do PhDs on curcumin derivatives. Bhai, uske aage niklo. So one part is education. The second, Aditya rightly covered, is the ratio of success is very, very low. Third, what we also need to understand is that NC research by itself, if you want to divide, is two separate components. One is the success of the molecule at lab scale, right? And second, which is the much bigger cost, which is the issue of taking the molecule into trials. People need to understand that even if you have a molecule which is a me too, the cost that of taking it through clinical trials will be humongous. So we need to think through how many of our companies have that kind of financial capability today, that if they have a successful molecule, they'll be able to take it through clinical trials. They'll probably have to look at some kind of partnering, etc. And partnering will be difficult in the times to come for a Me Too.
I'll also
So,
add here, Sandeep, तुषार ने बोला था ये on this podcast only कि majority of the molecules ना जो foreign में भी invent होती है outside India, उनका जो base research है वो academia से आता है.
Exactly.
हमारे यहाँ academia में वो दम ही नहीं है, वो change ही नहीं करते. My syllabus was the same that my grandma studied in a class 10. Yeah. I mean, what the hell is that? Over 2 generations, syllabus hasn't changed. Right?
If you ask for PhDs today in our premier institutions, I think the word curcumin derivatives should be banned, and we should be fundamentally relooking at what kind of PhD research should we be allowing. हम 140 करोड़ की आबादी है, हम लोग 140 करोड़ के पेट देखते हैं, हम 140 करोड़ के दिमाग नहीं देखते हैं. We need a fundamental rethink on how we can do better. हम आज भी एनसी रिसर्च और अभी नोवार्टिस वाला क्वेश्चन पूछा गया करीब 1.5 घंटे पहले, किसी ने ये नहीं क्यों पूछा कि आईआईसीटी, यूडीसीटी, एनसीएल, सीएसआईआर इन सबों ने भारतीय लोगों के लिए कौन सी दवाइयां क्यों नहीं बनाई हैं. काला आजार आज भी प्रॉब्लम है, अनीमिया आज भी प्रॉब्लम है. ये सरकार से पूछो ना. See, I may be going on an off-track rant here, but our healthcare education space and healthcare delivery space is a very complicated phenomenon. It
Same
will
as
take
our district
maybe 4 or
education.
5 podcasts.
I would want to add something here uh, and take it on a slightly more constructive note. I think what's happening now, see, if you see innovation may, there are 2 or 3 things that are needed. One is, of course, resources, the people that you need to really carry out this research. Second is the access to funds. Third is access to the overall talent ecosystem. So Indian companies are doing a lot of things. They're starting to do a lot of things now that hopefully over the next few years we'll start to see dramatic improvement in innovation related outcomes. So one is, if you see, Indian companies have started to do this whole in licensing, out licensing thing collectively much better. So the out license part of it was intuitively well understood earlier also, to partner with others to fund the research. But a lot of Indian companies are also now actively focusing on collaboration with academia and with small biotech companies globally to get in good clinical development candidates. So a lot of Indian companies are now building their pipeline on innovation side. Second, as these companies have started to get bigger in terms of balance sheet size and ability to spend money, for a start, we have started with 1 or 2 molecules at a time. But I think it's a matter of time before one of the leading companies gets one molecule right, and that will lead to a spurt of uh, fundraising opportunities, as well as in dramatic increase in the number of molecules we undertake in in development. Uh, Third, I would think that at least in the biosimilar space, I mentioned it earlier also. I think the clinical trial costs, which are prohibitively high today, we will see dramatic reduction in those costs in the next 3 to 4 years, and we'll consequently see a significant rise in biosimilar pipeline and complex molecule pipeline across the board. Even some of the smaller Indian companies today would end up in this space. So I would say that while we may have not done much in innovation in the last 20 years, I would say in the next 5 years, certainly I see some dramatic improvement in this space.
And
And
just to
maybe
support Tushar here, Biocon's itolizumab, जिसका नाम अपने शायद लोगों ने कोविड के दौरान देखा होगा, itolizumab was in license from a Cuban research outfit.
correct. अभी मैं भी I think if थोड़ा सा constructive, there is a very small company, I don't want to name that. They have already out licensed an NCE, and that molecule is about to get commercial, and this Indian company will start getting royalty payments. It's a it's a great management, but because it's a very illiquid stock, I don't want to name it. I have a vested interest. For that reason, I'm just keeping it confidential. Another company which is much bigger, that I can name, that has done a master stroke. So they bought a phase 2 biologic, not a chemical entity, biologic phase 2, and they launched it commercially using a partner in a third country. So this is Sun Pharma's Illumia. I covered that in my Alpha series as well. ये Samsung Biologics इसकी manufacturing कर रहा है, and the molecule is already commercial, generating good cash flows. और ये phase 2 में लिया था Sun ने. So they have developed this from that point onwards in house. So it's not all gloom and doom, but yes, I completely understand the ecosystem of great universities like the Cambridge and the Oxfords of the world is completely missing today, and that's where I think the investments have to go, because you have to start at the grassroots level, which is your education.
Right, sir. Sir, the questions will never end. So we have already 4 hours. So you guys must be tired. Although this is a very interesting session. So we last 2-3 questions and then we will close it for the day, sir. Does that would it be fine, sir?
Yes, Prince. Actually, I have to leave in 5 minutes,
Yeah,
so
Aditya.
I'll
So
excuse myself.
we ask you the question first. Last question for you. So
Sure,
on the
sure.
I would also need to hang up now, Prince.
yeah, Tushar will be
I think
wrapping
it's
up
been
in
almost
five
close
ten
to 4 hours
minutes. If
now.
you, yeah, 5-10 minutes. Okay. So, Aditya sir, on the medical tourism side, so how you see it? The profit pool will be with some few players, or it will be distributed across the hospital, or listed hospital, or maybe unlisted space also?
Yeah, so I think it will be amongst concentrated in few hands. See, medical tourism sourcing is not easy. Okay, so it needs a certain hub and spoke sort of structure. It needs alliances, ventures, and so the medical tourist को सपना नहीं आता ना कि अचानक से अफ्रीका से उड़ा और आके किसी एक हॉस्पिटल में एडमिट हो गया. So there is infrastructure there in Africa which advertises, which tells them, educates the patients that you can, go to India and get treated much cheaper, maybe much better too, and come back after recovery and still spend lesser than what you're spending. So medical tourism requires a presence in the country from where medical tourists are coming, or certain online platforms, which are willing to do this for you. So you need an alliance with the online platform, or you have your own infrastructure to sort of market yourself in those countries. Second, it requires better facilities than the average sort of hospital in India. So you need a medical tourist, because he's paying that kind of a cost of surgery, will require a slightly better sort of class of infrastructure. And thirdly, talent, because you need some of the better doctors to handle. So a medical tourist will generally not fly for an appendix operation. Na? He'll fly for a more complicated procedure because he's saving that kind of money. So therefore, he'll spend on travel and leisure, whatever. So it's not going to be, in my view, it's not going to be spread across chains. Few chains will get a lion's share of the medical tourists coming to India.
Thank you, sir. Thank you for your time. Yeah, Tushar, the question is like on the CNS space. So the person is asking views on how Glenmark Life Sciences is doing in CNS space. You there, Tushar? Okay. Sajal sir, would you like to take this, or Sandeep maybe?
So I have got no coverage of Glenmark Life Sciences. Sorry.
Same here. I don't track Glenmark generally.
Right. So, sir, one last question like that.
I could hear the question. Can someone repeat the question for me,
Yeah,
please?
Tushar, in the CNS space, your view on Glenmark Life Sciences, how the company is doing in that space.
Hello.
Am I audible, Tushar? Sajal sir, can you, speak and tell him the question? Perhaps he is not able to hear me.
Sure, Tushar bhai, the question is on Glenmark Life Sciences, the API company in
Right.
the therapeutic area of CNS. What's their core capability? What's their moat around that side of therapeutics?
So while I have not done a lot of detailed work on Denmark, I think it's a high capability company. I think two reasons why Glenmark is not as well tracked, and people don't really have a very positive outcome is A, because of the parent. I think there's a lot of concern around the capital allocation of the parent. Uh, B, I think there's a lot of business that still comes from the parent. There's two areas of concern, but I think overall, Glenmark, the group across the board, I would say, irrespective, you must appreciate the amount of efforts that they have done on the innovation side. They have definitely spent a lot of money, resources. They've spent a lot of time and built capabilities in a number of complex areas. And I think Denmark, the CNS pipeline looks very, very strong, and it stems for a very clear focus for the company and for the group also. If you see, even in Glenmark Pharma, the focus is on very specific areas in terms of capabilities. Whether be it derma, be it respiratory, CNS, there are very specific focus areas that they're working in India as well as globally. So it's a good company. It's worth tracking, and I think it could surprise in terms of outcomes over the next 3-4 years, both the results as well as the stock performance.
Thank you, Tushar, and thank you for your time. So we'll connect sometime again also. So Sandeep, one quick question: like anything you want to tell our audiences while studying this space, they should be careful about, and that one space which one data point which should not be ignored at any point in time.
So, in fact, in my first time appearance also, had said that I don't track numbers very closely. I'm a lawyer and I work with one domestic pharma company. With that, my inputs are not to be taken as investment advice. I think actually आज जो सजल भाई ने बोला बहुत ही important बात है, and this is related to 483s. I would definitely not recommend people to look at a 483 as a buying opportunity based on what I have seen as a pharma professional for the last many years. डोंट लुक एट इट एज एन एंट्री की एकदम टूटा है घुस जाओ डिवीज जैसे पैसे बनाओगे आई एम रिपीटिंग दैट एडवाइस व्हाट सजल भाई हैज सेड besides that I would say generally respect companies which have management integrity. We have seen some of the biggest Indian pharma names, family driven names for example, where integrity has been questioned. I would say stay away from those names. These are the only two things that I will say.
Thanks, Sandeep. So Sajal sir, one last
देखो
question.
मैं एक ही चीज बोलूंगा जो मैं बार बार बोलता हूँ, मैनेजमेंट का पीछा करो, रिटर्न झक मार के आएगा. Get on board with the right management and just wait. रिटर्न बनेगा ही बनेगा और जबरदस्त बनेगा. क्योंकि everything from balance sheet to cash flow to P&L, everything is a derivative of management capability, integrity, and the hunger for growth and the hunger for transformation. Because see, pharmaceutical is a game where you have to be transforming continuously. And if if you stay with your old molecules, assuming that they will continue to yield cash flows, I mean, you never know when USFDA could pull the rug under your feet and you have no innovation engine ongoing. So वही बोलूंगा, मैनेजमेंट को पकड़ो, बाकी सब अपने आप over a period of time बनेगा केकर.
Thanks, sir. So, sir, I would request you to repeat that वो साहूकारी बैंक वाला point जो आपने front ended और back ended वाला बोला था, so that would be very helpful for our audiences. Yeah.
नहीं, वो तो ट्वीट में क्लियर है. सी देखो क्या होता है ना, एनबीएफसी वाला बिजनेस या बैंकिंग वाले बिजनेस में लोन डिसबर्समेंट्स जो होते हैं उसको स्ट्रीट चीयर करता है कि नाउ आई मीन दिस इज द क्रेडिट ग्रोथ. आई मीन ठीक है, अभी लार्ज ग्रुप है, आपका डाइवर्सिफाइड पोर्टफोलियो है, यू हैव 4-5 companies with leveraged balance sheet and you have got 1 or 2 banks. So you think that these 4-5 companies are in different sectors, and yes they are. So it could be a cement company, it could be a green energy company, it could be whatever, and you have got 1 or 2 banks who have given crores and crores of loans to these groups. अभी जब पैसा वापस आएगा और वो नहीं आया, तो वो कंपनीज भी डिफॉल्ट करेंगी और वो बैंक्स भी डिफॉल्ट करेंगे, तो पूरा पोर्टफोलियो का बट्टा गया बैठ. एंड ऑन पेपर यू आर फुल्ली डाइवर्सिफाइड. आया मजा?
So, sir, one last question from you, and then we will close for the day. So, this question is again from Arpan Mehta. He's asking, how is Alpha made? For example, sticking to a story like Syngene and wait for the J curve to play, or to play something like turn around and allocate big, or maybe Loris, where we know management is good, de-risking ARVs and CDMO about to fire, but could be lumpy or other Loris bio triggers, fermentation, etc. Maybe in a immunoact will change the game in coming years.
So all these names have got a fair element of hindsight because they have made money in the past. You are kind of assuming, which may or may not be true. पैसा कैसे बनेगा? पैसा फ्रेमवर्क को फॉलो करने से बनेगा. फ्रेमवर्क क्या है? सेल्फ अवेयरनेस, own research, and then because you're self-aware, you have done your own research, we have the conviction, and you will have the patience. So that is the investing philosophy. And in terms of framework, you always have four elements, as I say: valuation, management, business, and industry structure. And especially in a country like India, where fraud cases are, left, right, and center, give more importance to the management rather than the business. Don't get the management wrong, because any story when multiplied with a zero, you will get a zero, and that zero comes from management.
Right, sir. And sir, some X number of conviction names were shared, and people were saying some names are missing. So, would you like to comment on that, or shall we give it a pass?
नहीं, देखो, मैं नाम में इंटरेस्टेड नहीं रहूंगा, क्योंकि देखो, मछली पकड़ के मैं आज दे दूंगा, कल तुम लोग फिर मछली बाजार में आओगे, कोई होगा नहीं. So learn to fish. I'll give you some pointers to assess the quality of the management. So I gave the SRF example, right? So that's one. Three things. First of all, competence, honesty, and growth hunger, right? वो सबसे important है. अभी इंडिया में कंपनीज हैं जो 100 साल पुरानी है और 40 साल, 50 साल पुरानी है, ज्यादा स्केल अप नहीं किया, वर्सेस अ कंपनी जिसने लेस देन 20 इयर्स में मतलब झंडे गाड़ दिए. तो वो एक ग्रोथ हंगर इज आल्सो वेरी इंपॉर्टेंट इन एडिशन टू ऑनेस्टी एंड कॉम्पिटेंस. देन सेकेंडली, द कैपिटल एलोकेशन डिसिप्लिन. सी, how I see management quality in a cyclical business is, how the balance sheet is at the bottom of the cycle and how the balance sheet is at the top of the cycle. So NOSIL as an example, and this is not something new. I gave the same example when I spoke with Vivek Bajaj on my face to face. And that's the reason I like the management, because it's a very cyclical business. ऑटो का एक तरीके से एंसिलरी हुआ ना, तो जैसे जैसे ऑटो इज अ हाईली सिक्लिकल बिजनेस, एंड इन अ सिक्लिकल बिजनेस टॉप ऑफ द साइकिल में सब जाके लेवरेज करते हैं, सबको हवस होती है, सबको लालच होती है. सारे एक्विजिशन ना, कोरस का ले लो, टाटा का, या इसका हिंडाल्को, वॉट एवर, all bad decisions. Lupin, Gavis acquisition, top of the cycle. Sun Pharma, Ranbaxy acquisition, top of the cycle. गड्ढा खोद के ये लोग घुसते हैं. तो balance sheet at the top of the cycle is a very good indicator of how the management has delivered and performed. And balance sheet at the bottom of the cycle, जब cash flow नहीं आ रहा है, पता चला you are saddled with debt, आप तो debt ही नहीं सर्विस कर पाओगे. एसआर ग्रुप, ये सब डिफॉल्ट करते हैं ना. तो बैलेंस शीट इज अगेन, वही मैं बोलता हूँ, मैनेजमेंट बैलेंस शीट कैश फ्लो इज अ डेरिवेटिव ऑफ मैनेजमेंट. फिर वॉकिंग द टॉक. आई मीन, यू ओपन अतुल का 2010 का एनुअल रिपोर्ट, या कोई भी ढंग का मैनेजमेंट पकड़ो, उसका पुराना एनुअल रिपोर्ट खोल के देखो, उसने क्या बोला था, और 10 साल बाद, 5 साल बाद वो किया कि नहीं. हैव दे वॉक द टॉक, राइट? एंड ऑल्सो इफ दे एवर कम ऑन टेलीविजन, how does they react when their stock is at the highs and the stock is at the lows? ठीक है ना? तो अभी जाके कोई भी स्टॉक उठाओ जिसमें 80% 70% करेक्शन आया, और उसका ट्रांसक्रिप्ट उठा के देखना उस पीरियड का जब स्टॉक लाइफ टाइम हाई पे हो, और ट्रांसक्रिप्ट उठा के देखो उस पीरियड का जब स्टॉक ऑल टाइम लो पे हो. सी इफ देयर इज एनी सॉर्ट ऑफ डिफरेंस इन देयर टोन एंड मैसेजिंग. कि ऐसा तो नहीं कर रहे हैं कि जब टॉप पे पहुंच गया तो कह रहे हैं कि 40% ग्रोथ आएगी, और जब बॉटम में आ गया तो सारे पत्ते शो हो गए, एंड देन दे आर सेइंग कि इट्स एक्सटर्नल इवेंट्स एंड यू नो वी कैन नॉट कंट्रोल दैट. So that's another. Walking the talk is also important. Also the body language, the tone and text, etc. Then also one indicator that I very actively watch out for is management getting influenced by HNIs and big institutions. क्योंकि ये लोग बहुत शॉर्ट टर्म होते हैं, स्पेशली इंस्टीट्यूशंस, बिकॉज इनको तो अपनी एनएवी दिखानी है मंथली. So they may influence the management to cut corners and sacrifice long-term growth by inflating near-term earnings. कि R&D कम कर दो, आज P&L में EPS दिखा दो, हम PE दिखा देंगे, भाव चला देंगे, बेच मारेंगे, and then किसी को चिपका देंगे. Because see, healthcare and pharma by definition means good things will take time. I repeat, all good things take time. जो SRF आज हमें दिख रहा है, जो नवीन आज हमें दिख रहा है, उसके सीड्स 10 साल पहले बोए गए थे. Nothing happens, out of thin air. And pharma is a pull business because see, the demand is predictable ना. अभी उसमें तो कुछ है नहीं. You cannot push, especially on the innovator side. If there is channel inventory, you cannot push more. And if you try to push your generic products into the channel inventory, the products will come back and bite you. Expire होके आएंगे वापस. कॉर्नर्स कट करके करोगे तो रिकॉल होगा, रेपुटेशनल डैमेज भी लोगे, कैश फ्लो का डैमेज भी लोगे. बहुत सारी इंडिया की जेनेरिक कंपनी जो है ये ना ANDA के ट्रेडमिल पे रहती है, इनका यही काम है, प्रोडक्ट रिकॉल करना. एक्सपायर्ड प्रोडक्ट चैनल में फंसा हुआ है, उसको लेके आना, राइट ऑफ करना. बताते भी नहीं है कि एक्सपेंसेस क्यों बढ़ गए. अकेले में जाके कोने में पूछोगे तो धीरे से बोलेंगे कि इसलिए बढ़ गए कि एक्सपायर्ड माल था, वो अब रियलाइज किया. आइबुप्रोफेन में एक कंपनी में हुआ था, अब नाम नहीं लूंगा, छोड़ो. ठीक है ना. तो मैनेजमेंट विल गेट अंडर प्रेशर टू एंड देन अगेन वन इंडिकेटर इज मैनेजमेंट मे बी अंडर प्रेशर टू इशू कॉन्क्रीट गाइडेंस. यू कैन नॉट प्रेडिक्ट द फ्यूचर. आपको नहीं पता है कि आपको USFDA से चैलेंज आएगा या रेगुलेटर से चैलेंज, किसी और रेगुलेटर से चैलेंज आएगा या चैनल इन्वेंट्री से चैलेंज आएगा. यू कैन नॉट गिव एनी कॉन्क्रीट गाइडेंस. So and again, cost of compliance is always lower than the cost of remediation. ठीक है ना. तो these are some of the pointers. I mean, I'll give you some more examples here. So if you go and see the companies like Tata Group, why I praise them? They do the right thing. And there are certain chemicals that Tata Group said that they will never manufacture in India because they are so hazardous and polluting more than the hazardous, and they don't want to pollute their own country. So I mean, there are many things that you need to understand, and that's why there is a pinned tweet where I say you read through the earnings calls and annual reports of 10 companies, even if you are invested in one, because that will help your holistic understanding. I mean, Jubilant Pharmova, they are serial defaulter. 2013 में Spokane and Montreal. Today, Nanjangud and Roorkee. राइट. तो वही बात है ना. तो वैल्यूएशन, लोग सिर्फ वैल्यूएशन को देखते हैं. मैं कहता हूँ इनकी करतूत भी तो देखो. राइट. एंड देन there are so many sort of other examples. So I gave examples of so many smaller companies where management has been really top notch. And some of these companies, they do their presentations, annual reports as if they are already mid cap, and that's how they conduct in their earnings calls. Great transparency. Thank you.
Right, sir. Thank you so much. So guys, this conversation were purely for education purposes, so no buy sell. So thank you to everyone who has come, and especially the speakers, Sajal sir, Tushar bhai, Sandeep ji, and Aditya sir, and Rahul. They spent considerable time, as we say. Sir, we were hoping for 2 hours, and ye umeed se dugna, it lasted for 4 hours because the space needs time to explain. So I think we are able to do justice with the queries of all the participants, and there were some issues accepting the requests. So I tried taking their questions from the comments. So even if some questions are left unanswered, and if they will be reasonable questions, or in such case, our speakers will surely will have a look and try to answer in their capacity. So thank you again, Sajal sir, Tushar bhai, and everyone. And it was really overwhelming and so kind of you to record the session for greater good, because I have almost received 300-400 requests of recording last session. So again, that was covered in today's session. And Tushar bhai, despite personal commitments, he spent 4 hours with us. Thank you, Tushar bhai. So thank you, Sajal sir.
Thanks, everyone.
Thank
Thank
Thank you.
you. Bye bye.
And guys, the recording will be available. So do go through those who missed it by any means, or you can share in your circle so that maximum can benefit out of it. Thank you once again, and we will connect some other time also. Thank you. Okay. Good evening.
Thank you.